Wow, some people were clearly stuffed of compliments. I can see people are still complimenting each other. In a short while, I'll be introducing my co-MC and myself. But just to kickstart business at the authority, we are a God-fearing authority. And as such, would like to officially open up with a word of prayer. And so I'd like to invite our Assistant Commissioner, TID, Mr. Julius Nkwaside Ponoka, to just come and give us an opening word of prayer. Assistant Commissioner, I don't know if you have another title, if I should add pastor or bishop, but I'll allow you to give us an official opening word of prayer.
Okay, thank you. Thank you for that. That's my compliment. Okay, let us pray. We thank you, mighty Jesus, for this wonderful time. We thank you for this opportunity that you have given us as an organization to sit, talk with our key stakeholders, and do what we are supposed to do. Father, we pray that may you give us wisdom, may you give us understanding, may you give us knowledge, may you help us to work together for the good of our country, and may you continue to serve our country and liberate ourselves and become financially, economically independent. We thank you and praise you. Thank you, Jesus. In your holy name I pray.
Thank you very much. Ladies and gentlemen, you're all now officially welcome to the 7th annual URA Appreciation Bankers Conference. My name is Ronnie Habasa, and I'll be working with, he's the Commissioner Programs. I'm the Assistant Commissioner Programs. Mr. Lambert, you want to introduce yourself?
Good morning, Ronnie. Thank you very much. Good morning, members. Happy to be here and humbled to be in front of you. And like my Assistant Commissioner has said, I'll be running the programs as well from the bottom here to complement my Assistant Commissioner. So for this morning, I'm the Commissioner Programs, right?
Wonderful.
Wonderful. But we're happy to have you, and we're looking forward to have a seamless function. Thank you.
Beautiful. So I believe you all have copies of the program at your tables. Maybe just one or two things to guide us. We have an application called Slido. And if you have a smartphone, would like to just use that QR code. I believe there are also copies of the same QR code at your tables. Just scan. That code is going to be very instrumental in your participation. So all the questions and contributions you might have. As a matter of fact, there's a poll right now, a little roll call. Which entity are you representing? And so far I can see only 4 banks, 5 are compliant. As you know, compliance is one of the parameters we use when we are giving out the awards tonight. So please scan the code and go on. I see we have I&MB Bank present. And I saw the big man, Mr. Ntulume, around. You're very welcome, sir. Good to have you. I can see all the other banks, NCBA, Stanbic, you're all welcome, Standard Chartered, Tropical Bank. This is how we shall know who is here and how to acknowledge you.
Now, Ronnie, you have excluded us of capability funds.
Now, if you have a cartouche, I'm afraid you might not be able to be compliant.
Those who have 2 extra mobile phones can help us.
Can help you to do so. Yes, so tonight we also have the awesome opportunity to give out the appreciation awards. And all of you are here, of course, as people who support us in facilitating trade. And by close of business, we shall have awarded in 3 specific categories. One being compliance, innovation, and how customer-centric your bank is. So we'll find out about all of that a little later. But for now, without further ado, allow me to request you to put your hands together for our Commissioner Corporate Services from the Corporate Services Department of the Revenue Authority. Let's put our hands together for Mr. Richard Karisa as he comes to give us the official opening remarks. A round of applause as he comes. Mr. DJ, feel free to give him some music. Mr. Karisa is also known for his dancing skills.
Um, Thank you. Hello, am I audible? Okay. Thank you, MC of the day. That part of the introduction was reserved for another moment, not now. My dancing strokes will be unleashed later. Having said that, you are very welcome. Our key note speaker today, our beloved representative of the PSST, our colleague, our friend, our partner in this industry, Mr. Guapus, from the Ministry of Finance, other officials from the Ministry of Finance and Bank of Uganda, colleagues from the banking sector or the banking industry, the leadership of the Bankers Association here present, CEOs, MDs, CFOs, CRMs, and all partnering entities from the banking industry, the Uganda Revenue Authority senior management team, colleagues from the private sector foundation, members of the URA team, ladies and gentlemen, distinguished ladies, you're all welcome to this conference. It is an honor for me and a privilege to stand here before you at this URA 7th Annual Bank Appreciation Conference for the year 2024. I think you deserve a round of applause. As we all know, this is an annual convention that enables us to meet annually to discuss pertinent issues within our industry, within our sector, but most importantly, that enables us further strengthen our existing relationships. So I thank you and commend you in that regard. Having said that, it is also a year that we identify new strategies, new partnerships, new developments in the industry that are desired towards improving and focus us on the challenges ahead in our day-to-day business operations. Above all, in this regard, we continue to thank the mighty Lord, because everything starts and ends with the Lord. I continue to thank the Lord for his enablement of all the industry players in fulfilling and achieving our mandate and strategic objectives. As URA, we are privileged to host you once again as our dear strategic partners in the area of collecting revenue on behalf of our government. I say our government, meaning that all of us are under the umbrella of government, public or private, but we are under the umbrella of government. Gathered here today is a mighty, and I'm using the word mighty deliberately, representative of 25 commercial banks, 2 MDIs, 2 telecom companies that are fully represented in this house. In addition, we also have financial institutions in this house, representation from the Ministry of Finance that superintends all of our operations, but also representatives from our partners of the private sector. On behalf of URA and on my own behalf, I thank you all for sparing your precious time to come and attend this event. I say this specifically because usually the morning hours are the productive hours. Having spared your time to come here, engage with us, partner with us, is a clear a symbol that we are all aligned into developing our country. As part of the URA strategy, we are fully committed to engaging all our relevant partners and stakeholders to ensure that we strengthen further the collaboration that we started many years ago. I understand also we have expectations and experiences, but most importantly, to obtain feedback from you, to share information, devise more ways of working together, discuss relevant and salient issues that may be impacting our businesses, look at new developments and improvements required for our growth, and developments in the different areas that we serve to achieve our golden mandate of revenue mobilization. With our presenters that will be introduced to you shortly, and panelists for today, and the interactions that will examine the different topical areas, this annual Bankers Conference will go a long way to contribute to the aforementioned goals. Ladies and gentlemen, today's theme is financial technology trends and financial inclusion for enhanced tax compliance and transformation of Uganda's economy. The salient words here are enhanced tax compliance and transformation of the Ugandan economy. If the financial sector is not aligned, is not well groomed and nurtured, it definitely impacts on the economy. But I will leave that bit to our panelists who will guide us and discuss further as we delve into the day's theme. Understandably, financial technology trends are an integral part of our businesses, and they influence our business transactions, affecting both taxpayer and the customers. Fintech and blockchain technologies continue to evolve, leading to storage of useful business data, which can be analyzed for tax compliance and business growth. Financial inclusion being the availability and equality of opportunities to access financial services, it refers to a process which individuals and businesses can access appropriate, affordable, and timely financial services. From where we stand, tax compliance is basically making sure that a business or an individual fulfills the tax obligations, which I'm sure and confident that all of us in this house are at our best. Today, I would like to thank our leaders and staff of the various partnering institutions for the numerous developments and service platforms offered to our clients to enable tax administration and compliance. As financial institutions, you have always had to re-engineer your businesses, processes, and models so as to create more efficient business operational frameworks in order to ensure not only the seamless accessibility of financial services, but also to ensure continued sustainability. The catchword here is continued sustainability. You have increasingly extended financial services to the business and non-business communities, but you are also among our large taxpayers. I can confidently, with no shy moment, state here that as we are all in this house, you are our valued large taxpayers, and in that regard, we appreciate you. Therefore, we thank you very much for partnering with us. We take nothing for granted, but appreciate you for your endeavors in facilitating growth, development of the economy, growth of businesses, and ultimately, the increase and growth of government revenues. As I conclude, ladies and gentlemen, I encourage you to continue riding with us as we drive to attain economic independence for our nation by performing your noble duty and activities that are within your reach and mandate to improve domestic revenue mobilization for our country. Uganda's tax to GDP ratio cannot be further emphasized, and you are definitely our partners in that regard. Let me reiterate Uganda's URA's commitment, as we are a willing partner and determined to work with you to exploit new areas of mutual interest, growth, as we mobilize more government revenue to deliver our country from economic dependence. I'm confident, and very confident at that the discussions and the interactions and sharing of experiences that we'll have at this conference today, and the conclusions that will result at the end of the day herefrom, will go a long way in providing the required impetus and momentum for a positive way forward as we transform our country by financial growth. Last but not least, ladies and gentlemen, I would thank to the organizers of this event. It takes a lot of time, it takes a lot of effort and detail, and in that regard, I would want us to put our hands together and applaud the team that organized this conference. I thank the organizers of this conference once again for putting your efforts and resources to this, but also appreciate you for the partnership that we have exhibited over time. With these few words, but many, ladies and gentlemen, allow me thank you once again. Allow me appreciate you for the effort and the partnership that you have exhibited over time as we develop Uganda together for God and my country.
Another round of applause for Commissioner. Thank you, Richard. And let me request the members, now that I'm up here, to give you another loud round of applause. And we want to thank you for now breaking the ice and setting the pace for us. And I'm very certain that we are now comfortable. Introduce the next item on the program, and that is to hear from our keynote speaker this morning. I was expecting to have a CV of 32 pages, but I'm happy. I'm happy I only have 5 inches of the program, of the CV. And this is none other than our representative of the PSST, Commissioner of Financial Services in the Ministry of Finance, Planning and Economic Development, Moses Ogwapos. And Moses is a person of 32 years of experience in public policy, specifically in taxation. Taxation, international trade, regional integration, financial sector development. Moses has been instrumental in the design of the various East African customs trade, taxation policies, legal instruments, Uganda tax policy and administration policy, and is currently the focal person at the Ministry of Finance on financial inclusion program and implementation of national programs like the parish development model, which we all know as bankers here, the reform of the capital markets, and financial sector stability, to mention but a few. And because of my program, I want to go to the next page because it is actually very long. Ladies and gentlemen, put your hands together as we welcome Moses to come and move a few remarks to us. Thank you very much.
Thank you very much, MC. Sorry, I didn't get your name. Lambert. Thank you, Lambert. Thank you, Richard, for your opening remarks and for hosting us. I'd like to acknowledge all of you, ladies and gentlemen, in your respective capacity, and I appreciate you for coming for this very important event. URA makes me very, very jealous because this topic, I would say, is most suitable for me to host as Commissioner of Financial Services. When I saw the notification from PSST that I should represent him, I was kind of lost why URA would be hosting such an event. But nevertheless, I'm thrilled to be here to represent PSST, but also being in charge of the financial sector. I think it is a good coincidence that I've had the opportunity to come and be part of this event. Just as the introduction went, I've indeed had a long experience at the ministry. And just to mention one or two things about the interaction between the tax authority and the financial sector. When I joined the Ministry of Finance, you can't believe it, but the Treasury, where my colleague sits, Hussein, was actually a place where taxpayers brought cash. Cash was paid at the ministry. The long room, a famous term in customs, Mr. Chichi, you recall that, a popular term in the customs nomenclature, was where our administration sits. So people actually brought cash to the ministry. And the revenue officers were called collectors. Some of them were called collectors. So they went out there and not only assessed taxes, but collected and carried the money in their boots. Okay, they had Land Rovers and pickups. Some of them used personal cars. The reality is that not all the money found its way to the treasury. Some of it remained in the boot of the officers. And that is true. So you can imagine how we have evolved from that time. And then eventually, when URA was formed, things started changing. I remember the transition was very painful because, I hope I'm not breaching confidentiality. I recall the then Secretary of the Treasury had a sort of misunderstanding with the people who had started running the authority. One of them is a minister now, I think. So, because revenue was paid then to the Treasury, the new outfit, URA, instructed taxpayers to pay revenues to the Uganda Commercial Bank. But the Secretary of the Treasury was not comfortable, was not confident about that transition. So he issued a public statement to reiterate his position as the Secretary of the Treasury and how all revenues must be paid to the Treasury. and that must be obeyed. Then eventually, we transitioned into paying the revenue to only one commercial bank. At the time, it was UCB. They had the monopoly of receiving all our revenue. Well, now it is history. We moved from that, and now we have practically all the commercial banks participating in the process of collecting revenue, and they are being part of that. And I'm sure somebody else will speak about this from I believe, the enormous benefits that we, as government, and particularly in the role of revenue collection, the enormous benefits that has brought to our work. I thought I should mention this. I'd like to introduce my friend, my colleague, Andy Norman. Andy Norman works with me in tax policy. And if you like what I'm going to say, he has played a big role in putting down the thoughts. And then later on, I'm sure somebody will introduce my colleague. I don't want to preempt that point, Mr. Hussein. So I'm here to represent PSST, Mr. Ramadan Govi. He's not able to attend this event. He's on official duty out of the country. I have a speech which was prepared on his behalf, so I will present it. And the speech is addressed to the Commissioner General, distinguished leaders of commercial banks, microfinance deposit-taking institutions, and telecom companies, colleagues from across the financial sector, ladies and gentlemen, good morning. I am delighted to be here today to give the keynote address on behalf of the Permanent Secretary, Secretary of the Treasury, at this timely and important conference. I would like to extend my thanks to the Uganda Revenue Authority for their invitation. The Ministry of Finance relationship with URA is one of the most important in the financial sector, and I am sure we will continue to work together productively for the good of our nation. Ladies and gentlemen, the theme of this keynote address is the role of the financial sector in the transformation of Uganda's economy. So today, I am going to begin by talking about what economic transformation means. First and foremost, transformation is necessarily ambitious. It seeks to revolutionize our economy on a grand scale. This means producing new products in new ways, starting new businesses in new industries, selling new merchandise in new markets, but above all, it means building a more prosperous economy fit for the 21st century, one which delivers affluence for all. To drive economic transformation, we must move away from subsistence and towards innovative industries, promoting productive manufacturing and high-value services. The financial sector is critical to achieving this challenge. From the biggest bank to the smallest circle, the entire sector must be geared for growth. This is why financial sector development features heavily in the third National Development Plan and Uganda's Vision 2040. There are many ways in which the financial sector can deliver economic transformation in Uganda. But today, I'm going to cover what I believe are the five most important. The first one is capital allocation. The financial sector gathers savings from individuals and institutions, and channels them into productive investment through providing credit to growing businesses. This is why economic transformation is often preceded by high levels of savings. Gross savings in Uganda currently amount to 22% of GDP, higher than the 16% seen in Kenya, but below the global average of 27%, and far off the rates seen in high-growth countries like China and South Korea. There is also room for improvement in levels of credit provision. Domestic credit provided to the private sector by banks is worthy 13% of GDP in Uganda. This is lower than Tanzania at 15.1%, Kenya at 31.5%, and a global average of 96.4%. To achieve economic transformation, we need to boost savings and make sure they flow through banks and other financial institutions to power private sector growth. The second way in which the financial sector can drive economic transformation in Uganda is through risk management. Although investment is new equipment, although investment in new equipment, technologies, and factories essential for growth is undoubtedly risky. And so, it is the job of the financial institutions and sometimes government to help businesses to manage these risks and finance or facilitate investment. This is also true at the micro level, and government, through the agriculture insurance scheme and other schemes, is helping farmers better manage risk so that they can invest in their farms and boost agricultural productivity, just as an example of the risking investment. The third is that the financial sector powers economic transformation through infrastructure development. To grow and prosper, countries need infrastructure. Roads, bridges, schools, universities, airports, power plants, electricity cables, mobile networks, the pipeline that we're trying to do, all these are critical for economic transformation. And they all cost money, and a lot of money. It's the financial sector's responsibility to ensure appropriate financing instruments are in place to deliver indispensable infrastructure projects. The availability of long-term loans at low interest rates is essential in this regard. I'm sure Mr. Kasi will speak about this and how the financial sector in Uganda is positioning itself to provide this most needed capital. Government is therefore working hard to develop strong capital markets capable of supporting long-term infrastructure projects. Plans are also underway to create an enabling environment for infrastructure, municipal bonds, and other instruments that will support this cause. Colleagues, the fourth channel through which the financial sector influences economic transformation is innovation. For an economy to prosper, it requires innovative new companies to spring up, introducing new solutions to old problems. The financial sector can help achieve this through venture capital and private equity funding for startups, angel investor providing seed capital, and corporate innovation funds to drive technology solutions. Financing and support to help entrepreneurs to commercialize new technologies is also a central component of economic dynamism. You're welcome, CG. The fifth and final route of transformation is financial inclusion. The logic is simple. More people with access to financial products means more people who can borrow to invest in their funds or businesses. More people who can save for their economic future, and more people who can mitigate the financial risks that hold them back. Each additional person who is financially included is another ticket to the economic transformation lottery. A financially excluded Steve Jobs could never have founded Apple. A financially excluded Bill Gates could never have built Microsoft. And you could say the same for Murwana, you could say the same for Lalani, you could say the same for so many of the good examples we can cite in our own society. But we opted to choose these outstanding innovators, obviously because all of us here in the room are touching a product right now innovated by either Bill Gates or Mr. Steve Jobs. Therefore, boosting financial inclusion can help Uganda find our Steve Jobs and our Bill Gates. This is why government is so supportive of financial inclusion, and I am glad to say these efforts are paying dividends. The recently published findings of the FinScope survey for 2023 confirmed that Uganda is making strong progress, with overall financial inclusion having now reached 81%, up from 77% in 2018. Government is now working to drive that figure even much higher. The Honorable Minister of Finance launched the second National Financial Inclusion Strategy late last year. The new strategy will run until 2028 and reaffirms this government's ambition that every Ugandan has the financial tools they need to flourish. Ladies and gentlemen, those of you paying close attention will have noticed that my 5 ways in which financial sector drives economic transformation are closely interconnected. Savings are important for credit. Credit is important for infrastructure development and innovation. So is risk management. Financial inclusion ties them all together. In this way, the financial sector can enjoy a self-reinforcing relationship of growth and prosperity, or suffer a vicious cycle of stagnation and decline. And so, if we think of the financial sector as an engine of economic growth, one broken piston can bring the economy to a grinding halt. We must all, therefore, be responsible mechanics and maintain our financial institutions with care and dedication. Allow me to close my remarks by reminding you all that while the financial sector may be complex, its value is clear. There can be no transformation of Uganda's economy without a strong financial sector. Let us all continue to work together to build one. I thank you very much.
I think one more time, a much-deserved round of applause for Mr. Ogwapus. And he has very ably presented and mentioned those 5 pistons that, as mechanics, we need to make sure all of them remain intact. capital allocation, risk management, infrastructure development, innovation, and financial inclusion. Thank you very much. One more time, just acknowledging the presence of our CG. Thank you so much for coming. He will be giving us closing remarks a little later. So just giving you that update so you can adjust the program accordingly. Without further ado, next in line with the presentation, I'd like us to put together, he'll be giving us another keynote. I'd like us to put our hands together for the Managing Director, Centenary Bank. Fabian, of course, is a leadership catalyst, a strategist, governance expert, a coach, mentor to young banking executives, and a renowned agroforester and Rotarian. If I'm to read you his entire CV, I can do this until the cows come home. But currently, he is the managing director at Centenary Bank and has held this role since August to date. So why don't we put our hands together? He's absolutely equal to the task that he's about to come and perform. So the topic will be financial inclusion, indeed, as a driver of business growth and sustainability. So why don't we put our hands together for Mr. Fabian Kasi as he comes to give us his presentation. Mr. Guaposi's presentation is also available. If you'd like a copy, that will be available for you. Thank you. I believe the team behind will be displaying that presentation. Yes.
Well, as it comes, thank you very much for the introduction. The Commissioner General of URA, PSST in the house this morning. My colleagues, the captains of banks, I've seen a couple of them, and everybody that is here this morning, ladies and gentlemen, good morning. When I got a call that I should come and say something about financial inclusion and how it helps business growth and sustainability, and the call was coming from URA, I was a bit excited. Excited for a reason that I thought to myself that I think URA, cares for banks. And they know what financial institutions generally do contribute to ensure growth of businesses and to ensure that these businesses are sustainable. Because at the end of the day, as we collect taxes, you don't want to collect them today and tomorrow there is nobody from whom to collect those taxes. So I want to thank you very much. First of all, for organizing this occasion when you have to appreciate what banks do, but also to offer a platform to be able to share ideas, experiences with regard to what banks do to ensure that businesses grow, and they not only grow, but they are sustainable to offer an opportunity to contribute to the development of the country. As we know, there is no country that has ever grown or developed without banks. A lot is said about banks. We'll always hear about complaints about interest rates, complaints about charges, and so on. But these are things that banks have to do in order to be there in a sustainable manner and also to be able to support growth of businesses that would be contributing to taxes. So what I'm going to talk about is basically in those 3-4 things. What we've done at Centenary Bank and banks generally under UBA, and financial institutions, because it's not only banks that facilitate financial inclusion, but many other financial institutions like the MDIs, microfinance institutions, and so on. They all do, contribute. Financial inclusion and business sustainability, and what we've specifically done to be able to propel the efforts of URA. And I'll also request for an opportunity to just make a few comments on the proposals that are under discussion currently with regard to taxing operations of banks. Let's go on. That's me. Let's go to the next. I think that introduction has already been generously done. Thank you very much. What is financial inclusion? I think we all know what financial inclusion is all about. Basically ensuring that we include as many people, and it has already been spoken about. How do we ensure that we get as many people in the banking space as possible? Of course, you learn some of the surveys that have been carried out. We understand and have been told it's only about 14% of people that are banking with banks, and about probably 50 and around 50 that are doing other financial operations, but not necessarily dealing with banks. So the question remains, how do we get in as many more people to operate with banks so that they can develop, so that they made themselves available to be able to contribute to the development of the country through taxation. This is, kind of a journey, some indication of the things that have to be done to include as many people as possible in the banking space. But the summary of that is that we can say financial inclusion stands on 4 pillars. The first one is that we must ensure that there is accessibility to financial services. The second one is that we must ensure that those services are affordable. You know, the pricing of the services that financial institutions give, how affordable are they to the people? That will ensure that people come and partake of them. The third one is that I've talked about accessibility. Accessibility, we talk about the various delivery channels. And again, you will see when we go on, the various channels that banks have employed to ensure that people access financial services. The other pillar of financial inclusion is sustainability. We need to ensure that we have financial institutions that are sustainably providing services to people. That way, you'll have many more people coming, because as we know, financial institutions are selling trust. And that trust, people need to know that you'll be there today, you are there tomorrow, and many, many more years to come. That's when they will come and trust financial institutions and be able to bank and keep their money with those banks. So anything that is done to affect trust is sabotaging financial inclusion. And therefore, our appeal, to the tax authorities is that whatever is being done, whatever is being proposed as taxes, as approaches to dealing with the banks, should be aimed at ensuring that trust is upheld. Because once banks lose trust, nobody is going to use them. Nobody will come to use them, and if they don't come, we've seen sustainability won't be there, and therefore, mechanisms and opportunities to have people for whom to tax may be limited. So we need to ensure that as we do these policies, as we do taxation, it should be promoting trust of financial institutions, so that we get in many more people, deal with these banks. And I'll comment on that later on again as I conclude. If we can move on. I've already spoken to this. We still have very few people that are dealing with banks. We are challenged to ensure that we have in as many people as possible. And this challenge is not only to banks, but to everybody that is interested in the economic growth of the country. Taxation authorities, parliamentarians, policymakers, and everybody. How do we ensure that we come up with the policies that will ensure that we get in as many people as possible? Technology has been used to ensure that we bring in as many people as possible, and these are some of the things that have been deployed by way of technology to attract as many people as possible, and those are the various things that they do. We've seen the telecos come in, we've seen agent banking come in as one of the channels of distribution by financial institutions, mobile banking, use of phones, for people to access financial services, online transactions, and so on. And of course, when people are setting policies, when we are thinking of how to increase and widen the tax base, all these things are looked at. But as we look at them, as I said again earlier on, how do we ensure that as we look at them, we are promoting trust in all these channels so that people feel safe, people feel comfortable, and they trust them and come to use them as channels, thereby including as many people as possible in the banking space. If we can move on, this is in summary, what Centenary Bank in particular has been doing over the years. We recently celebrated 40 years of service and transforming lives in this country, and this is how far we've come. Center agents, almost 8,000 of them. We have people using cards to transact, over 1 million of them. People using online services. Mobile banking as a platform, almost 1 million of them that are connected on our platform called the Center Mobile, and many other things. And of course, this is, not to talk about the branch network that we have, which is one of the biggest in this country. And of course, all that meant to ensure that we deliver, we extend services as close as possible to Ugandans, to be able to have them get included in the banking space. We can move on. This is just to show the journey over the years, how profitability has been growing over time. Of course, this is in the spirit of transparency, and I'm not shy to display these numbers because the tax authority, I'm very much aware of all those numbers, and we are as transparent as we have always been. But this is the journey over the years. Almost 3 million customers, the biggest number of customers in this country. Again, indicating the kind of contribution that the institution has done in this economy. Number of branches, I've talked about them, 82 to date, having moved from as low as 47 in 2011. Automated teller machines. These are all channels that, again, are supposed to enable access to services. Let's move on. Total assets now, almost 6.5 trillion Uganda shillings. That is the total balance sheet, and having given out loans of about 3.5 trillion Uganda shillings to about 300,000 enterprises in this country. Deposits that have been mobilized, about 4.5 trillion. Again, that has been the journey. Employing over 3,000 staff. All these, jobs and things of that nature come through in there. This is just to summarize the kind of products that are, always being designed to ensure that, we create services. One of the pillars of financial inclusion is that we should be giving services that are usable, usability. And that's why we come up with as many products as possible. I talked about affordability, accessibility, and sustainability as the 4 channels or pillars of financial inclusion. So loans, we have deposits again. Again, looking at specific sectors or segments of the population, the women, the refugees, the elderly, the young people, all of them having products that are usable, are meeting their needs, and therefore, having the trust to come and use financial institutions. We've gone into insurance. We have bank assurance. Again, we've connected with the telecos, whereby people can, transfer money off their accounts to mobile wallets and vice versa. Again, making it seamless and easy and comfortable for them to operate from wherever they may be. Financial literacy is very important. We need to keep educating the population about the need and the importance and the benefits of using financial institutions. Sustainability, of course, if people are working with financial institutions, they are able to access capital. And again, it has already been spoken to. Capital for investment to grow their businesses, the training, the adoption, creation of jobs, and thereby, developing the economy. You know, there are things that, again, we have to do to try to address the many emerging issues. You know, we have green loans, for example. We have loans or products that are geared towards protecting the environment. As we speak now, it's no longer about the profits you see institutions make, but it's quite a lot to do with the environmental protection, social, you know, engagements, and so on, and therefore, you know, being able to come up, being able to have institutions that are sustainable. Let's go on. You know, I've already talked about environmental protection. Let's go on. CSR, all those other many things you've heard the institutions do. Here, it is just to summarize how we've been supporting URA, the tax authority, to collect taxes. By the end of last year, we had, you know, mobilized taxes of over 250 billion through all those other various arms. We've been facilitating tax collection on behalf of URA, monthly collecting about 20 billion. And of course, the employment that we've created where people can pay taxes. And it's not only through the staff that we employ, but also you saw the agents, almost 8,000 of them, though all those are jobs, which should offer an opportunity for tax collection and the other many, you know, connected operations. I just wanted to, again, I said I wanted to comment about some of the proposals. As you know, there is a proposal now that all transactions that agents will be doing should be taxed. And I think we've already talked about it under UBA, and we've already had discussions about it, that we talked about how do we ensure that whatever we do generates trust in these channels. Now, if an agent is going to be taxed on all the transactions they do, you know, the question is, how is it going to affect their operations? Of course, the argument has been that because mobile money operations are taxed, also operations of agents should be taxed. But if you look at a person who uses mobile money, is not a person that is using a bank. And under a financial institution, a lot of taxes have been slapped on whoever is using a financial institution. And the person who goes to agent to transact is a person who has an account in a bank, having, you know, paid a number of taxes in various areas. Now, if you again follow him to try to stop him from using an agent, it is an increase in the burden and in the process reducing the trust that anybody that would want to use financial institutions, you know, would need. So we are saying that maybe we need to revisit that proposal, look at it, and see what effect it will have on financial inclusion and what effect it will have on the trust that people, the public, should have in financial institutions. There is also a proposal that every time we are recovering, you know, chattels or securities or assets that had been pledged for loans, you know, there should be VAT. That transaction should be VATed. And again, we go back to the other question. What will that do? For example, when we've been arguing about interest rates being high, what will happen if you are going to do that? It means the risk profile of that person will go up, and what we are going to see is increase in interest rates, which are already a burden, which are already a challenge. And we think that that is a thing that needs to be, you know, revisited. The other, I think it was last year where we are almost being told to share bank account information with URA. Again, you go back to the question that what would that do to the trust that people have in financial institutions if all their information will just be shared without any reason? Of course, when there is a reason, we know. Every time there is a reason and URA wants information from banks, we are obliged to share it, and we do share it. But being able to share everything with URA when somebody knows that his or her data is seated with his or her commercial bank, it will go a long way to erode the kind of trust that these people need to have in these institutions. and therefore be affecting financial inclusion. I thought I needed to mention a few of those remarks. I want to thank you very much. I want to thank you again, URA, for organizing for this engagement. We want to pledge as banks that we are always very supportive because we are interested in the growth of the economy, and the economy can't grow if taxes are not being collected to be able to be invested in projects that contribute to the growth of the economy. Thank you very much.
Thank you, Mr. Kasi. Another round of applause for MD, who has really taken us through the journey of financial inclusion and what Centenary Bank, but also he didn't want to really bias himself with Centenary Bank. He talked about Uganda Bankers Association and the key players that are helping URA with all the tax collection and trade facilitation. Thank you very much, Fabian, for that. Ladies and gentlemen, we are still moving on with our program, and for those who have just joined us, you haven't missed much. The beauty is that we shall be sharing with you all the resources that we have shared since morning when we finally leave. So do not feel left out. I hope you have had your breakfast as you are coming in, and also for places of convenience, we shall use the downstairs. That's where we shall be able to access those facilities. Mr. Kasi shared a lot about trust, and I do pray that your relationship as UBA with URA, we trust that you will have a win-win situation that will benefit all of us as citizens of the country. And the CG is here, and surely I know he will say something about that. But next on the program, allow me to call and welcome a lady of compliance experience who is going to share with us about information exchange. And Mr. Kass was talking about information sharing a little while ago. And Ms. Agnes Nawire Asawola is going to help us try to understand what this all means when it comes to the tax authority. And Agnes is an assistant commissioner at URA in tax investigations, and she's mandated to promote voluntary compliance through investigating tax crime and tax evasion schemes. Also, is mandated to investigate fraud and basically related criminal activities committed by taxpayers. Agnes has over 20 years of experience in tax administration and tax compliance management, and she's currently a senior transformational leader at URA, who has, through the 2 decades, led various functions, including tax audits, customs enforcement, intelligence, investigation of tax crime, to mention but a few. Agnes also has 15 pages of her CV, so allow me to just mention an inch of that. So ladies and gentlemen, please put your hands together. Welcome Agnes to come and move a few words about information exchange. You're most welcome, Agnes.
Thank you, MC. Good morning, ladies and gentlemen. All protocol observed. To manage time, I've already been introduced. I'm standing in for the Commissioner Tax Investigation, Mr. Dennis Kugonza, who had to attend to an urgent matter and wouldn't be here. With me, a force behind exchange of information. From the previous speaker, URA and the financial institution. We're in a marriage. And where the world is going, we don't see ourselves separating or divorcing. The marriage has to get tighter and tighter, mpaka last. The banking institutions, the MDAs, the financial institutions, basically the financial sector, you are part and parcel of holding information that Uganda Revenue Authority consumes. And the most information that we are privy to are the financial information which resides with you. For purposes of appreciating the concept of exchange of information, I'm going to have the manager exchange of information, David Dongo, is going to make a brief presentation. And thereafter, I will be able to discuss a little more during the panel discussion. Ladies and gentlemen, I want you to put your hands together and welcome Dongo, David, who is going to run through the presentation within 5 to 10 minutes so that we manage time. Thank you very much.
Thank you so much, Agnes. All protocol observed. Good morning. Yeah, allow me take a few minutes to trigger your thoughts towards the concept of exchange of information with other partners in the global stage. And specifically, I'll talk about the automatic exchange of information. So I'll highlight a few definitions, the legal framework, and then the obligations to financial institutions, and how would it happen, and the next steps. Yeah, just to draw context, Uganda joined the rest of the world in 2012 under the Global Forum, which is a global network by the Organization for Economic Cooperation and Development. And since 2012, we joined that network. From 2014, we have been implementing the first standard called the Exchange of Information on Request. And we have so far exchanged with over 147 countries. When we are carrying out audits, tax audits, involving cross-border transactions, and we need information from another country, we use that platform to obtain that information. Now, we, as Uganda, have committed to another standard, and that is the automatic exchange of information, which will be taking place with effect from next year, September 2025. These financial institutions have been in this journey. They have been involved in these standards. If I can refer to the Foreign Account Tax Compliance Law, where financial institutions are required to report assets owned by the US account holders. That is something that already I know financial institutions in the room that operate beyond the borders of Uganda are already complying with. I can also draw your attention to the anti-money laundering and countering financing terrorism and the proliferation financing requirements under the EMERO Act. I know you are aware about those obligations. Now, I only want to confirm to you that there is now another standard called the Common Reporting System and the automatic exchange of information, where you will be required to provide some information. And what is automatic exchange of information? Come next year, we shall have a systematic and periodic exchange of bulk taxpayer information, and specifically this is on financial accounts and financial assets with the participating jurisdictions. And this will be the bank balances and the incomes coming from dividends, from interest, royalties, salaries, and the detail. How will it happen? I will highlight, but specifically it will be information that is owned by the non-residents. What is the legal framework? I already mentioned to you that we already assented to the International Convention. That is the Convention on Mutual Administrative Assistance as Uganda in 2016. And as well, Minister of Finance is the designated competent authority supposed to exchange information with other jurisdictions. And in 2012, the Minister of Finance delegated that authority to Uganda Revenue Authority as the competent authority. So we also assented to the Multi Competent Authority Agreement. And a little bit back, and the law that I'm talking about that was domesticated is the Convention on Mutual Administrative Assistance in Tax Matters Implementation Act. And it is this act that will that came into effect 1st July 2023, that highlights some of the obligations on financial institutions that I'm going to highlight shortly. Now, a little bit, I will not go through all these definitions, but I wanted to highlight one, non-resident for automatic exchange of information. Financial institutions will collect information on non-residents. So as per the income tax, we are all aware that the income tax defines a tax resident, such as for an individual, somebody who has stayed in the country for at least 183 days, and for entities that are registered here. So for all the non-residents and they are holding accounts in your banks, you'll be required to collect information on them. And the law also defines the reporting financial institutions, including the custodial institutions, the depository institutions, investment entities, and special insurance companies. And the law defines. And I want to interest you to open up this law and read it through. I know some of you have already access to this law. Now, specifically, this is where I will take a minute. The obligations of financial institutions. The law requires that you will undertake due diligence procedures to identify the reportable accounts. And then, using your due diligence procedures, you'll be able to identify who are these accounts of the non-residents that you will be required to submit the information to the competent authority. And you'll be required to submit this information to URA come 31st May 2025, because that's the submission date. And then the competent authority will eventually share with the other jurisdictions. And it is specifically Section 6 of the Automatic Exchange of Information Act that describes the obligations of financial institutions in ensuring that you identify the reportable person, you collect this information, and prepare it to disseminate it to URA. And on which accounts of the non-residents? We have existing accounts and new accounts. Any account that was maintained by the reporting financial institutions as at 31st December 2023, that is referred to as an existing account. So what is required is just to update the records of that account. But for accounts that were opened after 1st July 2024, they are referred to as new accounts in the law. Now, what is the flow like? How will it be? Already, you must be undertaking some of the steps like certifications, identifying the new accounts and the existing accounts. And then the law requires that from January to December 2024, this will be the first reporting for Uganda. We are going to report on the first set of accounts for the year 2024, and this information will be submitted to the competent authority, that is URA, and we shall take some time to analyze it. Of course, you report this information on 31st May 2025. Then we shall share with this information in September 2025 with the other jurisdictions. It is on a reciprocal basis, as financial institutions here collect information on non-residents holding your accounts, and we share with those with the countries where they reside. We shall also receive information on Ugandans who are holding accounts in the foreign jurisdictions for tax purposes only. Now, there are a few things that opportunities we can tap into. Right now, we have, actually there was a launch of the Voluntary Disclosure Program, the Ministry of Finance launched in November, that for all Ugandans holding accounts in foreign jurisdictions, we now have a window. Come and declare and tap into the benefits. Because come September 2025, we shall receive the information, and maybe the law might take its course on penalties and other things. But right now we have a window. But the financial institutions in the room, you know, when you have continued to work with URA, and this tapping into the compliance framework, of course, creates a lot of opportunities for our country. Investors are attracted to our country. And at the global stage, we enjoy the name of being transparent for tax purposes. And our next steps, we are requesting you today that we are going to engage further your teams, the compliance officers, the financial officers, into the details of how the reporting is going to be done, the formats. We are developing an in-house system. It has already been emphasized that the interface between URA and banks is no doubt. So we are developing an internal system that will manage this process. And we shall go through the details of how, which formats, when, which type of information is required, and how it will be disseminated to URA and eventually to other jurisdictions. I want to thank you. Thank you very much.
Thank you very much, Mr. Dongo. Another round of applause for our presenters. Thank you very much for that presentation on information exchange. We want to move a little bit quick such that we are within our limits as we had stated. And let me request my Assistant Commissioner Programs, Ronnie, to kindly come up and help us with what is going to happen next, and then we kick it up from there. A round of applause for the Commissioner as he walks onto the stage.
All right, thank you very much. Ladies and gentlemen, we're now going to go into a panel discussion. And in the interest of time, I'll also advise our panelists in as much as possible to be able to condense our presentation time up here. We will have 4 panelists, and I'm just going to be introducing them. All of them with very heavy CVs, as has already been mentioned, but I'll just keep it simple. And of course, they'll be speaking to our theme of the day, financial technological trends and financial inclusion for enhanced tax compliance and transformation for Uganda's economy. First on the list, we have Dr. Francis Mwesige, who is the Chief Economist, Uganda Development Bank, CEO representative. Let's put hands together for Dr. Francis as he makes his way to the panel. He'll have a chance to briefly introduce himself a little later. Next we have Madam, our Assistant Commissioner Agnes Nawira, who has already been introduced, and she promised to give the rest of her presentation while on the panel. A round of applause again. We also have the Commissioner Internal Audit. Let's put hands together for Mr. Hussein Isingoma, who is also going to be on this panel. And last but not least, the CEO Enterprise Uganda, Mr. Charles Ochichi, as he also comes up here to join the panel. Each of them have been given specific elements of the theme, and they'll be speaking into those. But again, I'll invite my commissioner programs to come and just facilitate this panel and for us to keep it within the allotted time. Thank you very much.
Thank you, Ronnie, and to our dear panelists, you're most welcome, and thank you for accepting to be a part of this. We are going to use a few minutes for each of us, about 6, will be enough, and I know in those 6 you will pour out all the 10 years or more of what you have, because you actually know what you do, and we shall just have a snapshot of it. But in no particular order, I will start with my good friend from UDB, and you're a very interesting party in this relationship, and would like probably you take up the floor and you tell us a brief about the role of UDB in commercializing agriculture for economic growth, for us to be able to reach middle income status. And maybe you can provide an overview of what UDB does, and so that we can get context into why you are here and what you do.
Thank you so much. Ladies and gentlemen, good morning. All protocol observed. I would like to start by really contextualizing this question. The role of UDB in agriculture commercialization. To contextualize it, I had a presentation, but I think won't go through it, but the slides can run in the background if available. But look at the agriculture sector and the structure of our economy. The presentation so far and submissions have talked about our aim and aspiration to raise our tax to GDP ratio. You can increase that if you have increase in incomes. But how do you do that if you still have 68% of the population or working age population employed in agriculture that is less productive? So the structure of our economy is in such a way that you have agriculture contributing 22% to your GDP, but it is employing 68% of your population. That is exactly what is behind me if you look at Uganda. Unemployment, and the trends haven't changed for over almost 20 years. That you have the big chunk of your population held in agriculture that is contributing 22%. And that's what that speaks to largely, speaks to the productivity of agriculture. It also speaks to the value of what you produce. Now, in the next slide, you will just wanted to compare Uganda with high-income countries. So you realize that agriculture contributes about 1.3% of GDP and is employing about 3% of the population. So when we talk about agriculture commercialization, we are essentially talking about aiding structural transformation, that you really want to release labor force from the agriculture sector to other segments of the economy, and mainly that is manufacturing, industry, largely, and services. It is when you aid that structural transformation that you get to increase incomes and revenues, and even what we are discussing here, enhancing tax to GDP ratio, will as well increase. The next slide that you'll see here is what explains that difference in, for example, Uganda. And the structure for Uganda is similar to sub-Saharan African countries and other low-income countries. What explains that differences? It mainly stems from productivity. That productivity, here we just show yield per hectare for only cereals, but even if you looked at productivity across other agri-value chains, you'll find the same. That our productivity is almost half, or even more than, rather less than half, of the productivity or yields in other high-income countries. So if you really want to transform agriculture, you have to start from enhancing productivity in agriculture. So what is UDB doing? Mr. Kasi gave a good introduction when he was talking about financial inclusion. UDB has put in place or has developed quite a number of products to enhance financial inclusion. To begin from, UDB is running with 3 high impact goals, and one of them is to promote sustainable agri-food systems. And when we talk about sustainable agri-food systems, we really mean whole to fork, all the activities across the entire chain, from production and productivity, right from pre-production, access to raw materials, the right inputs, access to information. And then you go to production and high yield, the productivity that I showed earlier. Then you go to post-harvest handling. Currently in Uganda, post-harvest losses stand at about 40%. And that is a real huge loss for the country. You can't realize structural transformation if you're still losing that. You know the discussions we've had on phytosanitary standards for the country. We look at then value addition and processing, and then all the way to access to markets. That is the entire chain. That's one of the high impact goals, and we have other 2 high impact goals, one on sustaining, promoting a sustainable industry. Now, you realize that for Uganda, 75% of our industry is actually agri-based. So without transforming agriculture as a sector, you cannot transform industry. So when we talk about transforming agriculture, you're actually talking about transforming industry in the country. And therefore, all the efforts we put in enhancing agriculture production and productivity and upgrading other segments of the agri-value chains, they all feed into industrialization. And right, so when we talk about services, you cannot achieve a sustainable, a robust services sector without a robust agriculture sector. So what we do in the next slides, what we do as UDB, we started with diversifying our products to make them accessible to different segments of community. Mainly, speaking of agriculture, so we have debt and equity. Debt are loans, and like all other financial institutions, you'll find they have that product. But we also have equity, where we co-invest with the business, especially those that are potential, but do not have, for example, collateral. They do not want to access loan. So those 2 are first products. But even within debt, we have other products, differentiated products. For example, if you're in agriculture and you want an asset, say you want a tractor, we can help you with, provide asset financing, and we use that asset as collateral, meaning that you would not need other forms of collateral. And basically, this diversification is to aid our customers, mainly farmers, specifically to agriculture, to be able to access credit. If we go to other ones, because a number of these are repeated later, we have other financial interventions that we launched 2 years ago, and starting again from Mr. Kasi's presentation. When you talk about financial inclusion, there are segments of society that are innately excluded because of their characteristics and where they are located and their capacities. So 2 years ago, to address a number of challenges, especially in as far as access to credit by smallholders, we partnered with a fintech solution. A number of us might have heard about Nsibuko. Nsibuko is a Ugandan fintech initiative. There is a real good young man who has innovated and come up with this fintech. We call it AgriTech. So we created a product that we call AgriConnect, UDB AgriConnect. So we work and extend credit to smallholders organized in village savings and loan associations through this platform called Mobis that is run by Nsibuko. And this product has really helped us since we launched it in 2022. We've so far reached out to about 201 VSLAs to farmers, about 1,500 farmers through this platform. And it's one way, because initially it would be hard to support farmers that are applying to as small as 200,000, 100,000 shillings in loan. Because if you are to appraise that project, just the fuel you use to go to that farmer is almost equivalent to the money they are looking out for. So the cost of funding was real high for those, and such a platform has really helped us to reach out to those small holders that we hitherto are not able to reach out to. There is another product that also we're running with, a special program that we launched in 2021. Again, we really wanted to reach out to smallholders, VSLs, women and youth-led organizations or enterprises. And a number of these are in the agriculture sector. So we launched special programs with specialized interventions to those three segments I've talked about. And since then, we've approved over 40 billion going to those smallholders. Now, that segment before was real hard to reach to without such an innovation. And if you really come, for example, for women, we do not need, for example, registered land. We can even take customary land. And we know those were some of the hindrances that were impeding such segments from accessing credit from the bank. We have also had other interventions, for example, the cooperative farming. We're supporting quite a number of cooperatives across the country where farmers, because it would be hard to come as a single farmer, but if you belong to a cooperative, we have supported a number of them in the dairy sector, for example. You want a cooling machine at the community level, and your group of farmers, you real highly productive, you have milk, but you can't cool it, you can't preserve it. So what we do, we come and provide a farmer group support, either providing a cooling facility or water for production, valley dams, and so forth, to a group. We also have what we call, the last one here, the outgrower financing scheme, where farmers, a group of farmers that are attached to an off-taker, say a processor, can come and access money to enhance production, and then you have a clear arrangement with the off-taker that they will take on what has been produced. So these are quite a number of programs, and the last one is what we are planning to launch out. We call it program-based financing. This will be value chain targeted, and we identify a commodity, go and target different segments, we map it, identify different players along the chain, and partner with them. We provide funding, they bring in other forms of support. For example, de-risking instruments. We are looking at working with other, for example, commercial banks to say, when I come in, you can bring in insurance, we can bring in guarantees and other de-risking instruments to enhance the support to the agriculture sector. So I think I'll speak more to the other programs, but broadly, these are the programs we are running in the agriculture sector. And what we are seeing now is enhanced reach to that segment that was real hard to support before because, again, of the innovations we are running out. I'll be speaking to the numbers and how much we've done in that sector later. I do submit.
Thank you. Thank you, Doctor. And thank you for really expounding on the role of UDB. I will get back to you a little later, and I would also request that those who are on Slido, you can throw in the questions to the respective panelists. Quickly allow me to jump ship and go to the extreme left. Mr. Chichi, you are next on the fire. I hope you are ready for the fire. You're always ready anyway. And Mr. Chichi, you're a man who is always passionate about SMEs and what you do at Enterprise Uganda. We always see you on TV every Sunday pushing the message further to us to hear. But we want to know from you, what exactly do you do at Enterprise Uganda? Just give us a glimpse of what you do, and maybe you can also add on and tell us what support do SMEs need to reduce the business mortality rate, because we know you always tell us that you see very many of them not living to their first birthday. Maybe you can carry it on from there. Mr. Chichi.
Thank you so much, Bwana MC. I just wanted to, before I make my submission, to request Mr. Kasi to give me just two statistics. What is the highest loan you've ever given to a borrower in Centenary Bank? The size? Yeah. The biggest you've given?
Well, the four isolated ones who have got, 10 billion, but on average it is 1 billion, the biggest.
Excellent, excellent. And Centenary Bank is a Ugandan-owned bank. One more question. What is the percentage of the 300,000 Ugandans who borrowed 3.5 trillion that you mentioned here? The Ugandans in that percentage, how many Ugandans participated in the 3.5 trillion as a percentage.
How many Ugandans?
Yes, as a percentage. Is it 90%?
99.
99%. That is the basis of my submission. And my message is this: Ugandans, I want to, sorry, you wanted me to first say what Enterprise Uganda does. We build business success stories from whatever stage a person is at. Micro, small, informal, educated, uneducated, female, orphan, whatever you are, so long as your brain is working, it is sufficient for us to take over from there and make the best out of you. Now to come back to my entry point for my message. Fabian shared the word trust from the perspective of trusting banks. I'm going to share that word from the perspective of a Ugandan who is seeking to be sustainable in business, to be included in the financial sector. And to break that word in a way that you will appreciate it, the word trust is composed of two words, and both words are starting with the letter C. The first letter is character. Can I trust what you are saying when you come to the bank and saying you are going to borrow a loan to start a school, to build a house, to do this, or you are borrowing that money and going to do something else, but on paper you are saying something else? Character. Number two, that word trust also has got another sister called competence. You may be of good character, a person of some good intentions, but your competencies are so low, you can't do what you are trying to do. You are trying to go and construct a school, but the competencies are lacking. But you are honest, you're a Christian, but you don't have the abilities. If you do not work on those deficiencies, the word trust is missing. If you take that deficient picture to go and borrow a loan, you will not pay it. Not because you are stupid, because the competencies are lacking. And I'm bringing this message because we have talked about financial inclusion. And we have always tried to look at that from perspective of access to resources, ease of accessing these resources, cheapness of these resources, without addressing the other aspects that ensure that you are needed in the financial sector. Whoever you are taking into the financial sector, either through a SACCO, a government program, a bank, please address the two aspects for that person to remain included. The person should be of character. It is not uncommon for Ugandans to take financial documents to a bank of 3 years audited accounts. Do they know those documents? Have they read them? Do they know what the documents are saying? The documents are saying you have not been collecting your money for 3 years, and you are taking that behavior to the bank. Will that help you? The audited accounts you are talking about, you have not even read the projections. You are saying you're able to pay this loan in 3 years. Have you looked at the assumptions behind that? Trust is character and competence. If we do not fix those two, financial inclusion will always be a temporary effort. And how do you ensure that you have achieved excellent financial inclusion? An example. Look at the story of Nyegamehe, a young boy who was conceived, and the dad died when he was 3 months in the womb. Before he was born, the dad died. He gets born, and by the time he reaches P7, he cannot continue with education. But the fellow begins to build his character and his competencies through hawking, selling small things, but along the way, his competencies were growing. He starts a small business. He moves on from there, from Kabale. He keeps growing, and then later, by the time he was dying, the P7 graduate was having 60 trailers. The P7 graduate was having milling machines for oil, for soap. He had 3 hotels. He had arcades and malls. He was wanted by every bank. He was respected across the country. Do you see what it means to have financial inclusion that addresses the 2 C's? So friends, when we are talking about financial inclusion, this is what I'm saying. Somebody getting into the financial vehicle, accessing resources up to a maximum of 1 million initially, But as you begin to build your competence and character, you begin to now access 3 million, then 4 million, then 10 million, then 100 million. Centenary Bank is giving now a Ugandan 1 billion, a Ugandan. As we formulate these programs we are talking about here, we should be asking Centenary Bank, how did somebody who was accessing 100,000 10 years ago, today can access 1 billion? I'm driving at a message here. And the message is, whatever financial inclusion you are talking about, there is no theory about it. At the end of the day, it must address what I call the laws of the private sector. And there are just 2 laws of the private sector. The first law is, sell a solution for which the buyer will be able to come back without you begging them to come back. I bought food from you yesterday. I enjoyed your food. The next day, I'm the one coming back without you calling me to say, please, kindly come back to me. Repeat business is a reflection of competence. It's a reflection of character. That law is a given. It's law number 1. A happy customer who has fulfilled, an entrepreneur who has fulfilled law number 1 will also benefit again from that customer who will bring referrals. And the business begins to grow. Instead of mortality, it is growth. It is the opposite. If you cannot fix law number 1, mortality is inevitable. There are no prayers about it. Any bank who gives you money because you are losing customers, that bank is simply donating money. And it can't happen in the banking industry, which is regulated by Bank of Uganda. So that's law number 1. For anybody who is trying to push anybody into business, fulfill the first law. And the first law is simply saying, I have my money, I want food, and I'm going to put all this money to the person who is going to fulfill my needs in terms of food. But as you do now, law number 1, there's law number 2, that an entrepreneur again must fulfill for it to survive mortality. And the second law is saying, be ready to compete. Private sector, there's nothing like a P7 exam for P7ers. Senior 4 exam for senior 4s. Senior 6 exam for senior 6. In the private sector, you are a beginner and you are competing, selling your chicken with Yuga Chick. And nobody will say, please, Yuga Chick, don't come this end. This is for the small ones. And the buyer will be saying, I'm not going to say, where's a young man selling chicken today? I want to support a young person. It's about value for money. If service, quality, consistency, if those elements are not addressed, forget about going into private sector. Forget about having a cheap loan. Forget about saying, you know what, government should be able to start a special scheme for us in agriculture. Those are the 2 laws of private sector. They are ruthless, they are unforgiving, you can't change them. Because the people who are spending money are simply saying, I have my money and I want to put good doors into my house. I'm not going to be saying, where are my tribesmates who are making good doors? Where are they? I'm asking, where are the good doors? Where are they located? Whether the person selling the doors has got poor English, but the doors are good, I take the doors. It is that cruel. It is that deep water. There are no grandmothers in the private sector. And that's why you find that if you do not address these 2 things consistently, even the ones who were great at some point, you forget those things. Sell a solution that meets customer expectations. Use honor orders within 2 weeks. These days I have to remind you for 6 weeks, 7 weeks, 8 weeks. And if there's a competitor, I shift. But you used to be great for 20 years, you were great, but you've forgotten the game. I want to conclude my submission by saying, whatever Enterprise Uganda is doing, it was backed and continues to be backed by a statement that I shared by my first chairman, the late Mulwana. And he told me, Mr. Chichi, you have started an endeavor that will make Ugandans know that private sector is the way to go, but there's a price to pay. You pay the price, the returns are great. He said, tell Ugandans at any one moment you have, these are 4 things that they must look after. If they don't, they must fail. They must exit from the private sector. And he said, number one is a lavish lifestyle. You might be saying, me, I'm micro. How do I have a lavish lifestyle? If your spending is touching your profit and almost eating it all, it doesn't matter how small you are, you're on a lavish lifestyle. Why? This micro business, where you are eating away all the profit and almost touching the capital, tomorrow it will be dead. You will still be around, paying the things, trying to pay the school fees you're trying to pay. You will still be around, trying to treat yourself in the way you're treating yourself, but you're going to be in trouble. Number two, I just want to finish Mulwana's list.
Okay.
Number two, he said, unplanned growth and diversification. The excitement of saying, I can do this one also, I can do this one also, I can do this one also. That one eats the small ones, they eat the big ones as well. And as you look at failures, just look at this list of Mulwana, you'll find it exists almost everywhere. Number three says, the moment you have got a lifestyle, unplanned growth, number three is almost inevitable. Reckless access to borrowing. You borrow without answering a question which says, where will the repayments come from? In borrowing, cash flow is everything. You can pray, you can do whatever you want. Cash flow is simply saying, on quarterly basis, we want this amount of money. Reckless borrowings will not answer that question. And finally, he said, unfortunately in Uganda, because we are still a developing economy, number four is common, but teach Ugandans to be able to withstand it and toe the line until the end, and that is the word of jealousy. He says you'll be sabotaged, you'll receive all types of unfortunate incidences along the way, but keep steering the direction you have started going. Because if you do the development of your business so well, you will quickly get out of the jealousy zone. You are most hated in an area where you're surrounded by poor people who know you so much and they know how you have left them behind. If you can outgrow them, you go to a zone where you now associate with people of your class. But he said jealousy is real. So those four are some of the things that define the tough terrain of the private sector in this country. Thank you so much.
Thank you, Mr. Chichi. Another round of applause for Mr. Chichi, I think, is we can feel the passion for SMEs, and want to thank you for sharing with us. Hoping we can see you again on Sunday. I don't know if you still run those programs on Sundays on TV. Yes, you do. Around 3 p.m., 2 p.m., around there. So we shall catch you again on that. And thank you for having the character and competence of keeping the 5 minutes. Thank you very much. Let me now bring in a risk management expert, someone with experience in effective internal controls. And Mr. Hussein, I want to bring you on board, and like has been the norm, I would request that you probably give us an overview of what you do at the ministry. Mr. Gapos didn't want to preempt because he knew you were coming here. And also, as you do that, I want you to be guided by the following questions, or question for this matter. That we are talking about fintechs and all this technology in finance. So following the advancements and trends over the years, risks and fraud have been on the increase in the financial sector. In your view, from your experience, what are some of these risks that are inherent in the sector, and how can they be mitigated to increase customer confidence? And Mr. Kass was talking about customer trust.
Thank you very much, Master of Ceremonies. And thank you very much, colleagues, for hearing out since this morning. A number of things have been discussed. I'll start with what we do, what I do. I'm from the Ministry of Finance. My boss is here, the Permanent Secretary, Secretary to Treasury, represented by my brother, Moses. I come from the Office of the Internal Auditor General, which is part of the Ministry of Finance, and our role is really to provide governance, risk and control advisory, and also assurance services to the government of Uganda. And in that office, we do a number of things, one of which is really risk advisory, a role that I also played for almost 5 years as commissioner responsible for forensics and risk advisory. Right now, I'm not in that docket, but I speak from a number of issues. And I was also surprised, like my PS got surprised because of the previous, the kind of audience that there is, and the having to speak to areas which is at least more familiar. I did also got a bit surprised because in my previous call, I headed one of the professional sessions, which is called ISACA, and that is basically looking at information system audit and control, where we did a lot of things regarding cybersecurity, IT, information systems, and so on. So having said that, yeah, my issue is speak about fintech, the trends, risk and fraud and mitigation aspects. I visited the Uganda Bankers Association website yesterday when I was preparing a few of these slides, and I saw the common frauds in the banking sector, and I was a little bit surprised, but it's something that we go. When you look at those, that's in slide 3, when I looked at these common frauds, there were things that more or less are the traditional frauds that we find: check fraud, counterfeits, forged transactions, instrument alterations, and others in that order. But since this theme was basically focusing on the things that we do which are more transformational, which we've heard from all of you since this morning, I felt we need to talk about more of the fintech, the financial technologies, as well as the automation or digitalization as we talk about it. And of course, for the banks and the financial services sector that we have this morning, we've been driven into IT adoption because of so many reasons. And the previous speaker spoke about the AEOI. This is the automatic exchange of information, which I thought is one of the issues that are in line with the reasons why the banks and the financial service sectors have gone into IT adoption, and this is the regulations. Because the supportive role of the banks and supervision was basically to look at issues to do with, the regulation, to make sure that the banks comply, but as well as looking at other aspects of how we can do it. Now, typical example of the AEOI is one of the regulatory aspects that we are talking about, going beyond borders. And as I heard from the speaker, one of the issues is innovation, the transformation in terms of how you're going to do it. Because we are sharing bulk data, we are looking at cross-border issues. These are issues that are very important. The banks, of course, go into issues like changes in business model, the competition. My brother Ochich has spoken about it. I think Fabian also talked about it, competition. What is it that you're going to do that gives you a competitive edge? And this is something that is one of the issues that we are looking at, the business delivery, you look at the banking agents and so on. And it's so interesting because these innovations, which are basically transformed through automation and digitalization, are very, very, very important. And they can determine between success and failure, as well as sustainability, which my brother has talked about. Of course, we have consumer expectation and the social aspect of this information technology in the banks. But having said that, why I give that background is because one of the commonest issues which my brother has talked about, risk and fraud, is basically coming from the automation and the transformations that we do in the financial services sector. When you look at cyber space, which is the automation, because the cyber security aspects are delivering 3 main objectives for all our institutions. Number 1 is the confidentiality of information. I heard from Fabian about disclosures and so on. Need to do, access this information on need to know, need to do basis. Commissioner General will access bank information because he needs to know, but he also has something to do. Those are the principles for information systems access. We're talking about integrity of that information. Can you rely on it? We're also talking about availability of systems. If I want to access the systems at midnight, am I able to access that ATM? Am I able to go or to do online banking and transfer, etc.? Now, all those things put together bring in the risks of what we have actually been a key competitive
tool in the banking sector, and that's automation and digitalization. The cyber risk. You talked about risk. This is one of the critical elements for our survival. And what are the drivers of this cyber risk? Number one is technology expansion. You are looking at so many things happening within your banking sector and the financial services sector. You are talking about big data, the data growth, the exponential amount of data. I was speaking to somebody, actually there is some ongoing activity within our ministry, and they were telling me that the requirement for the data storage is 20 terabytes of data for a certain application. And I was wondering, saying how, in terms of our growth, in terms of the entities that we need to put on this system, how are we going to handle when we are like 30% into implementation? That is data growth. Do you have also the motivated attackers? Because as you do automation, there are people who are interested. So having looked at, the more why I speak for now today is the issue of a cyber crime, which is one of the biggest risks banks face. And I think you managers who are the captains of these institutions, you must be living. And I think if I asked you, what is it that keeps you awake through the night? I think it will be the issue of cybersecurity and cybercrime. Now, unlike traditional methods of fraud, which we may have been talking about, we have heard from the UBA website, cybercrime is one of the most complicated. And it includes a wide range of things that are going to be done and how people are going to access your systems. On a daily basis, there are what we call the persistent threats that you face. They are there. People are trying to reach your system, your platform, to see what is there for so many purposes. And of course, we have so many actors. We have individuals who are within your banks, those who are outside your banks. We have state actors. There are people who are going to be interested in knowing because of so many reasons, driven by politics, driven by so many ideas that I have. We have organized crime, we have terrorists, we have so many things. In line, of course, to the other risks that you face as banks, is this money laundering. And of course, the money launderers have got so many schemes that they are looking at, and they are able to use different attack methods or trajectories to reach your systems, your platforms. Those are within and the interfaces that you deal with. I wouldn't believe so much into the examples of this cybercrime, but I know you captains of these institutions have your IT systems, IT managers. Some of these things are familiar with you, but so many things are happening. We have typical simple things like social engineering, which comes through what we call the phishing methods, and many messages are coming from you. It's coming from a legitimate, you think it is Centenary Bank sending you this message. It's asking you about so many information, the date of birth, whether you are comfortable, and so on. You have to think twice how you respond to this, and all those things are happening. We have other things like where we have denial of service. And institutions are brought down, your application is down, probably the mission critical application is the one which is down. And you are not able to deliver that service, you cannot transact, and people are coming in, things like ransomware, they have encrypted your systems, and the only way to get back is to decrypt, but at a sum. And the people you are supposed to pay to, you are using the digital currencies. So the traceability of this person is even very, very difficult because you are not dealing with a person, a physical issue. You're doing about a virtual person whose identity, place, you cannot easily understand. So those are issues that you're going to be dealing with, and the financial institutions are very important. What about mitigation? Mitigation for all this critical cybercrime, which is, in my view, is one of the greatest issues that financial institutions face, is to develop cyber resilience. Your people who deal with IT system, digitalization, have to look at and develop systems that are able to, number one, anticipate, withstand, but also recover from incidents. Because recovery, are you going to be attacked? Yes. It's a matter of time. It's not if, the issue is when are you going to be attacked. But when you do, first anticipate it. Build systems that can actually ensure that you continue service, but also recover from those bad issues. So the banks need to do so many things. Number one, cybersecurity governance. I understand when you ask head of IT in many of these institutions, when you look at him, he's at a very low end in terms of the organizational structure, but he's actually in the back end. And when you look at these people, they are not available, they are only speaking to your systems. But IT strategy should be part of the business strategy. If you are talking about business strategy, how you are going to grow, market expand, product differentiate, etc., you must involve the automation. And those people must be at the table, the high table, to speak with you and see how are we going to deliver this strategy, the corporate strategy that you are talking about. So cybersecurity governance and IT governance is number one. But there's also threat intelligence, which I talked about. Anticipate what may happen. Do surveillance. Look at what is happening. Of course, there are things that are very difficult to deal with, like what we call zero-day vulnerabilities. You are not going to anticipate everything. There will be things, attacks, which are going to happen that have no precedence. It's okay. If they happen, make sure you have the capacity to recover from all those issues. So we need cyber threat intelligence, supply chain security. Sometimes we are importing. We are all going onboarding third parties, application, hardware, etc., software. These are third party. We can directly, if you are not capable, so critical, you are importing in vulnerability to the system. So we need to do with supply chain security, third party risks, but also incident management capabilities. Incident has happened. How are you able to deal with it? We've seen sometimes you have anticipated, you have done tests, you have done business continuity, disaster recovery tests, but sometimes the governance of those issues has not come actually in terms of being put in practical use. So one of the things banks should do, invest in continuous tests, invest in simulations, look at scalability issues, look at stress testing in systems, and this should be a continuous process. But also, our systems should be accredited. He has talked about trust. Fabian spoke about trust. The trust of clients comes in how your systems, whether they can be reliable. One of the things we are talking about is accreditation. Have you seen, if you've run this system for so long, are you able to have a certification for this system? Is it accredited? That as somebody is taking a decision whether to invest in your bank, acquire a loan, he knows he's dealing with a system that is resilient enough. And of course, as I'm about to end, forensics capabilities. Things are going to happen, but you need to have systems that are able to detect, but also discover how those things happened. Forensic capability within banking sector is very important. I know it might be very expensive, but this goes beyond, because fortunately for Uganda, you have the UBA. Can you collaborate across the banks to be able to develop these capabilities to discover when incidents have happened? And of course, there's this technical, what we call technical surveillance countermeasures. By the way, things are happening. It is cheaper to steal business model from a competitor than developing it yourself. And you own it. It's very cheap. Banks must explore ways in which they can develop what we call technical surveillance countermeasures. You sit in a bank, you are going to have a system commissioned, you are developing it in-house, but somebody is spying on you on how it's being done. And once he gets the basics, he's going to run very fast and he'll own it, and you have no recourse. So those are issues that we must be dealing with. And very final, of course, there are the softer issues. Awareness. How aware are your banks? I was speaking with my friend Brian here when we were talking about IFRIS and so on. And we were saying we might be surprised that these strikes that we have CG knows very well may have been a good opportunity. For every bad thing, what we think is bad is an opportunity for us. Awareness, people know. But you'll find this awareness even within the authority. People may not be so much aware about IFRIS. So we need awareness, we need training, and that is very critical. I won't stop here, the rest I'll take questions, but mainly the role of an audit, because I'm an internal auditor. Audit is very, very critical. I was the president of the Institute of Internal Auditors 2 years ago. I always speak to this. The role of internal audit in cybersecurity and dealing with the cybercrime cannot be overemphasized. And we need to invest in this role as critical as possible. One of them is preventive. How is it? Involve them in the cybersecurity strategy development. What are you doing about it? Involve them in the risk management plan for cybersecurity and automation. They will give you some inputs along the way. Do evaluate cyber risks, but also the tests of these issues. Does your audit plan, you sit with a board, you have a board of directors, you have a commissioner general, you have managing director. What is the language at those boards? Are we having issues to do with IT? Are we having cybersecurity? We have a committee that, for example, is evaluating this strategy. It's very, very important. Detection, of course, is in the audit plan. It is in the forensic capabilities that you can develop in-house, and the internal auditors can actually be trained on this area. And, of course, the use of data analytics. Big data. Big data is very important. You cannot be able to know if you have 3 million customers with Centenary Bank, I saw. How are you able to interrogate this kind of customer? If I come today and maybe if it's my mobile phone might be the unique identifier in the bank, but I'm going to use different names to open a bank account, how are you able to know it's the same person? If, for example, I'm trying to dodge certain responsibilities, you need to have capabilities to do that. Internal can help you in that analysis. In response, this is the response. Involve them in business continuity planning as well as the testing of those systems. Let them know the results. Let them know what is going on. Of course, you also need to do into the investigations. So there's a number of things internally can do to help the organization in terms of the response when it comes to the key crime or cyber crime or cyber security. Thank you very much.
Thank you very much, Hussein. Another round of applause for Hussein for really taking us into the internal controls and risk management. We want to thank you, and we shall get questions later on. Finally, on our panel, let me bring in the only lady. We apologize for that.
Maybe Lambert, allow me just remind the audience that with Slido, you can scan these QR codes at your tables. You can scan them to be able to participate. If you have a question, so that you can send it in real time, we can sieve those and make sure they'll be answered. Thank you.
Thank you, Ronnie. Agnes, you really come in at a time when Hussein had talked about fraud and everything, but you had your presentation and we probably got a glimpse of what you do, but I would also like to compound it more for us to really understand your role in tax investigations, but also when it comes to tax compliance, how do we incentivize the informal sector to promote compliance? Because that has been the really biggest issue, and Hussein was talking about the awareness bit of it. So really touch along those lines, especially the informal sector in terms of compliance with taxation.
Okay, thank you. Thank you very much. Once again, Agnes Nawira Sovola, the Substantive Assistant Commissioner, Tax Investigation. When I heard my colleague talk about fraud, that is what I eat. Yes, my role basically is to investigate into fraudulent activities, some of which turn out to be criminal, and then be able to delve deep to establish whether there was tax fraud or tax evasion in it. So when I hear anything to do with fraud, the next question is that in this fraud activity, was there any taxes that could have been evaded or lost? The partnership between URA and the financial institution comes a long way. When we talk about formalizing the economy, the financial institution has played a great role, bringing in the informality into the formal way of accessing the products that the financial institutions give, ability for the individuals and the businesses to trust the financial systems and build the confidence that actually they can manage their transactions, they can extend the finances that require from them, and be able to monitor their business. Now, URA identified the financial institution as a partner for us to be able to access that information which they already have. Now, accessing this information, we started that relationship some years ago as the PSST elaborated. It has been a journey of growth. And streamlining that process necessitated us to be able to have a smooth relationship and exchange of information between URA and the financial institution. We realized that as the globe, as the trends are changing, informal businesses are getting off the stage. For you now to register a company, we are soon engaging the regulatory body of registration that ensure that every business that's registering has got a tax identification number. For you to have any contract with the government, it's a requirement now that you must have a tax clearance certificate. For you to import or export merchandise, it's a requirement that you must have a TIN. So indirectly, formalization is actually happening. And for any business to thrive, you may, one way or the other, necessitate that you be able to align yourself so that you can transact with government, so that you're able to relate and transact with the financial institutions, so that you're able to actually benefit from all these other players in the economy. Exchange of information has been going on. Only that it has been exchange of information on request. Would request a banking institution or a bank if we are interested in a certain individual or a business to share with us the information that they have. And we base on that to ascertain how much they have actually earned, and from their earning, how much have they returned to URA in form of taxes. Now, where we are going with automatic exchange of information, it's actually a global requirement to strengthen transparency and efficiency in accessing this information. The information we are interested in as URA is basically the financial data that you already have, the other assets that the banks already have records of, but more so of the individuals and businesses that have got offshore investments, which the banking institutions, one way or the other, may actually have knowledge and privilege to have that information. Because the financial institution does not only facilitate the nationals, they equally facilitate across borders and at the global level. So exchange of information, automatic exchange of information is coming in to leverage on the already existing systems that the financial institutions have and the system that URA is building in-house to be connected to those systems so that on a periodic basis, like David already presented, this information will be required to be remitted to URA seamlessly. And of course, this relationship with the banking and the banking institutions equally is based on the knowledge that we know that the banking institutions do customer due diligence. So we believe that by the time they are interacting with this customer, they are opening up an account, they have done a customer due diligence that we believe will make us trust the information that they have and they'll be remitting to URA. So informality, as time goes on, as we are streamlining the way we are going to be accessing this information, slowly will fizzle out. And the appeal to the public is that let's formalize our business. That's the way to go. Let's formalize our business, and indirectly, this will equally widen the tax base. Because as you register, new clients, as they open up accounts, as you require them to have TINs, you know, in itself, you're actually helping URA to widen the tax base. That at the end of the day, really, everybody has got something to pay in the coffers, and no one pays much more than the other. So automatic exchange information is basically coming to leverage and help us do this exchange of information in a very seamless manner. Talk about fraud. Because we know that you're doing due diligence, and what my colleague has already expounded, all the risk management, the investigation, the intelligence, all the systems that have been built, we believe that that will support URA in fighting fraud, fighting the manipulation of data, system breaking, you know, all the forms of cybercrime that you've mentioned, because we know that the financial institution has got the capability to sieve who they are willing to do business with. Thank you very much, sir.
Thank you very much, Agnes, for those wonderful insights. Now, ladies and gentlemen, I want to open the floor to the audience, and I don't know if I have some questions on Slido. In case I don't, I can take one or two by show of hands. One or two. Ronnie, you can help me, just in case we have any. One or two questions to our panelists. You can direct to whoever you feel you want to answer yours in particular. Anything on Slido? Things have sunk in.
Things have been very clear.
And we have really been convinced by our panelists.
Absolutely.
And therefore, because of that, allow me now to wind this up by requesting each of our panelists to just move one final word they can have for us in resonating with the theme of the day to our audience and, of course, to the hosts of this conference. And I will start with Dr. here.
Thank you. Very interesting discussion here. And I think this platform, this engagement provides a great opportunity that we are bringing financial institutions with URA and that we are talking about the ways we can expand our tax base. Because for me, really, all these discussions, whether you're combating fraud, whether you're enhancing agricultural commercialization, productivity, whether you're promoting structural transformation, business growth, as Mr. Ochichi has indicated, all these aims to enhance our incomes, but also to expand our tax base. And I think we really need to agree that we need to realize structural transformation. When we talk about socio-economic transformation, when we talk about moving to the middle income status as a country, one, there are fundamentals that we need to work on, and capital is a key fundamental, and it's a key factor of production. So the institutions here are playing a key role in availing the needed capital. But I think the biggest question that we should be answering here, but also that we should take with us, is what conditions, what environment are we setting to ensure that different players, be it in agriculture sector, be it in businesses and other players, are able to access that capital on affordable terms. There is accessibility, there is affordability, but also how patient is it. At UDB, the place we play in, we really try as much as possible to avail affordable capital by pricing at 12%, almost half market rate, but also providing tenors that go up to 15 years, patience of this capital. But there is more that we need to that, and it's good that we have government here. UDB, I assume that we all know UDB as a government DFI or development finance institution, that we are supported through the Ministry of Finance, that we are working with the government to drive our national development plan. by running all the, I think out of the 18 programs in our NDP, we run with about 16 programs that we do support. So I think together we can do much more to aid structural transformation, to increase our tax base, and thus enhance service delivery. I do submit and thank you.
Thank you, Doctor. Thank you very much. Mr. Chichi, let me have your final say this morning.
My comment is that if we are going to achieve sustainability of the local enterprise, we must begin to have a long-term view on enterprise development. And I choose those words carefully. I'm not talking about just financial literacy. I'm talking about the entire 5 areas of enterprise success: governance and leadership, HR, operations, marketing and customer care, and then the finance angle. All those must be addressed. If you don't, you can include somebody in the financial system, and then you'll experience what I experienced this morning when I was driving to come here. Somebody who wanted me to pay him some money, and he said, "Mr. Chichi, do not send that money to this phone. This phone has got a date. It will all be taken away. I'm going to send you another number." The fellow is financially included, but you can see the character that is there. If we don't fix that, the fellow thinks he's clever. He will never walk the journey of Nyegamehe, who started from nothing to 60 trailers, to hotels, and all those things that we're talking about. So my message to the country and to the entire banking fraternity and all of us is, let us assist our people to go into financial inclusion with the competence and character through solid business development services. Thank you.
Thank you, Mr. Chichi. Competence and character indeed. Okay, Mr. Hussein, your final say this morning. Let us hear from you as well.
Thank you very much. Captains of the banks and financial services sector, through the years of what I've done, I see a lot of focus on the first line of things in the institution. When I talk about the first line, this is the normal day-to-day issues of operations. Must we have the bank running? It must be open and so on. That's okay. My word, which I see here and elsewhere, is the increasing focus, and I need really to persuade you that it's time for you to go beyond the first line of accountability. Manager credit risk, manager what, you go into focus on the second and third line responsibilities. That is second line issues of compliance and risk management. The option for you not to manage risk properly is crisis management for sure. Focus on the third line. Those who are going to look, number one, number two, what are you doing independently? Skill them, equip them, and these are your eyes in the organization. Those are the internal auditors. With automation, the third liners and the second liners must move as fast as the evolving technological landscape. And this is something that we must go. There is risks when we go into the automation, digitalization. There are so many risks, and they move so fast. They evolve every day. So our focus in terms of digitalization, in terms of assurance over those issues, must be as fast as we are innovating. If we don't, then the answer can only be, it's not going to be, it can be catastrophic. Let's build the resilient systems that not only withstand issues of attacks, hacking, and so on, but that can be able to recover as quickly as possible. And you cannot divest, you captains, your business strategy from the IT strategy. You are going to be missing the point.
So as we debate on how many customers we should have the next financial year, how many taxpayers, growing the tax register, and the means to grow it, if it is through digitalization, that strategy, you must speak to the people who are supposed to do it, the how of doing it. Otherwise, we run a very, very big issue. I want to thank you, the banks and the Commissioner General with your team for inviting us, and look forward to meeting with you anytime. Thank you very much.
Thank you very much, Mr. Hussein. Finally, Agnes, kindly have the last word on this.
Thank you very much, moderator. My parting shots are 3. Let's take advantage of the voluntary disclosure program as we wait to launch the automatic exchange of information come next year. Take advantage and make your records straight. Number 2, we promise to enhance tax education and awareness of this program and many other products that URA has, so that those that really need to be competent in this whole new product will have opportunity actually to be educated. And then finally, open your doors for us so that we work together, especially when we want to integrate our system with your systems, so that we have that seamless flow of information. And when that time comes for exchange information, we shall not have any hitch. Thank you very much. And once again, we appreciate you for responding to the URA call, and let this partnership continue. God bless you.
Thank you very much, ladies and gentlemen. Let us put our hands together for Dr. Francis from UDB. Thank you very much, Doctor. You can move back slowly. Agnes from Uganda Revenue Authority, thank you very much. A round of applause for you. Mr. Hussein, lovely. Thank you very much. A round of applause for you. And finally, Mr. Chichi, Enterprise Uganda, we love you. Thank you very much. Thank you. Ronnie, kindly come and also thank me for doing this, and you go away.
Absolutely. A round of applause for Lambert.
Thank you very much.
For also very ably handling the panel. You know, in the good book, it says to give honor where honor is due. And at the authority, we would like to just honor the guests we invited to give keynote addresses, the panelists. And so very quickly, I'm just going to invite our Commissioner Corporate Services, Mr. Richard Karisa, just to come and help us hand over a token of appreciation to our panelists and our various speakers. And so I'd like to invite the representative, Commissioner, if you can come. I'd like to invite the representative of PSST, Mr. Moses Ogwapus, just to come and receive a token of appreciation for taking time to come and give us that wonderful presentation. And I'll also be, I don't know if Mr. Fabian is still around. In the interest of time, even as they tear down, we are welcome to do this from the front here. And I'm sure our cameramen will be able to ably capture this. So Mr. Moses Ogopus would like to invite you and say thank you for a wonderful presentation. This is just a small token of our appreciation.
I believe Mr. Ogwapus has fans in the room, so a round of applause for Mr. Ogwapus.
Obrigado.
Thank you.
I believe Mr. Fabian, he's still present. Very good. Let's put our hands together also for Mr. Fabian Cassi as he comes to receive. Thank you very much. Thank you for giving us all the statistics from the bank and being very open with them, and for having the numbers at your fingertips. I now invite the panelists who were here with us earlier, all 4 of them, if you could just come and receive Mr. Chichi, please. You're very welcome. Mr. Hussein, you're very welcome as well. Mr. Mwesije, please. For transparency, feel free to open your box and declare, depending on the policy at your office. If risk is covered, everything, really, no need to worry. Madam Agnes, yes, even you as an insider, I would like to honor you as well. Thank you. A round of applause for our panelists. Thank you very much. And we are coming to the tail end of our event today. Thank you very much. Of course, as you're aware, the highlight after this will be the appreciation awards. And all of you are potential candidates for winning. Of course, there are parameters which you know about. But just before we get ready to do that, allow me to invite our Assistant Commissioner of Finance to just come and give us her brief remarks. A round of applause for Madame Diana as she just comes through to share some remarks.
Thank you very much, Ronnie. A very good morning, ladies and gentlemen. It is such an honor, such a wonderful privilege to be here with you today. Would like to thank you, representative of the PSST, for making time to be with us today. Thank you very much, Mr. Fabian, Kasi, and all our speakers this morning. I think you have generated a really interesting thought process for each and every one of us, and especially for the revenue administration, because I think our mandate is quite big. We always count on the fact that you have a spread and a reach that is probably wider than ourselves as the banking sector, and so we desire to really tap into that reach. I would like to thank you so much for coming out this morning to interact with us. And just as I get into a few facts about how we have handled our relationship over the next year, I would like to ask the finance team, kindly please come to the front for recognition. These are the men and women that work round the clock to ensure that our relationship is actually healthy, that we are following through with all of our obligations, and that none of them are falling through the cracks. So kindly come to the front. You can move to the front. So ladies and gentlemen, just here before you is the finance team of the Uganda Revenue Authority. We've got our manager, we fondly call her Kelly Onalongo, who is the manager responsible for collections. And then we have got our manager responsible for financial accounting, and we sometimes call her Afande. We also call her Senga, and this is Victoria Semugenyi. And then we have got a wonderful gentleman. So the finance team seems to be a little bit gender imbalanced, maybe. We've got a gentleman his name is Labeja, but we like to call him Mr. Lubega Eyedira Engabi. That is his Labeja. So this team works behind the scenes and has worked behind the scenes to make this engagement really possible. And our chairperson this time round has been Helen Takova, so I'd like you to just give the team a round of applause. You may take your seats, ladies and gentlemen.
I assure you, you'll not find a smarter finance team than this. Let's give them another round of applause, and perhaps they can share their plug for their tailor.
We do appreciate that compliment, and this tailor is IFRIS registered. Just for emphasis, we really cannot miss that conversation. I think it's been quite an interesting season for us. It turned out really tough, but I think at the end of the day, I know a scripture that says all things work out for the good of those who love God. So I'm always persuaded by that. Even in the midst of trouble, I'm thinking, no, there is something good. And I think there is a lot that has turned out good Needless to say, some of the publicity is not good, but I think it has worked out for our good as an authority. So we execute memoranda of association or of understanding with each of the banks that are here present in partnership with the telco companies as well. And these run for 3 years. We've got them running right now. They'll be expiring in the year 2026. We'd like to appreciate your partnership throughout this season. And these are monitored on a daily basis to ensure that each and every one of us is complying. And fortunately, the report that I carry today is that we have complied at least 98% across board as an average. I think for anybody who does business and maybe for our children who are in school, if somebody brings you a report that is reading 98%, you will be happy. You'll probably go out for a Javas or something. So what I want to say is we appreciate the effort that you put into ensuring that your systems are working, that your processes are functioning as they should to enable us account for government revenue in a very timely and efficient manner. All of our stakeholders carry out these integrations, and from time to time, these are reviewed to ensure that they actually work as they should. Definitely, every now and again, we have a mishap that could result into the loss of revenue or that could lead into reporting a little bit late. Now, the reporting a little bit late actually stretches beyond ourselves, and it touches on the client. And in that sense, it has the capability to actually affect that morale, the compliance morale. Therefore, once our bankers are working as they should, you support in ensuring that the taxpayers are actually happy to also undertake their obligation. I think there are not very many happy taxpayers, but I think this house is full of them. Mr. Fabian Kasi shared his numbers, and I know that they are not very different across board, and I believe that there is happiness as each one of you are doing your part to contribute to the growth of our economy. Now, what are some of the expectations within our MOU? One of them is with regard to acceptable instruments, and there is a whole range of them: cash, check, bank draft, to mention but a few. How have we performed over the last year? We have had an accuracy level of 95%. These are transactions that are registered and they are notified successfully, because we have a process by which once a taxpayer has made their transaction, you are required to notify us immediately. In other words, to tell URA that you have received this money so that a client is able to receive the service they require. And once you have also notified us, you also credit her bank statement. The level of accuracy here stands at 95%, and would like to thank you for that. We still have a room for improvement at 5%. These are transactions that come in because they are not registered. Now, there's a role for us to play in educating our clients, those that are dealing with us, to ensure that whenever a transaction is being handled that has to do with tax, it actually carries this primary identifier. We call it a payment registration number. That is very key. Would like to call upon you to support us in this regard in order to make this process seamless. Collection reports should be delivered every day, and we should ensure that also the transfers to the consolidated fund are done on a T+2 basis. The daily requirement is 8:30. Now, for this, we have requested that we actually have online access for all of the finance team that you stood here, that they are able to access these so that if the statement comes in at 8, we can get it and we can complete all our reconciliation as well. There's been a little bit of slow uptake on this. I think we've only got 5 banks that have complied with this requirement. And so there's a lot of room for us to improve in this regard. We call upon you to fast track, kindly deploy the resources required so that we can get this done and serve our clients as quickly as possible. As far as collection reports, we are at 84% on compliance. I think this is the lowest in all the categories that we have. We would like to make this better. 16% is still in the red. We request that we improve this as we go along. Exception reports, every now and again you get a transaction that does not come with the registration, or there is a credit that doesn't come through, and we expect that these are handled within 48 hours. On average, the banks work within 38 hours to resolve this. So I'd like to appreciate you so much for investing in that. However, we have got the exceptions that stretch to 50 hours, and this is an inconvenience to our client, could result in a penalty on that side. We request that, again, more effort is put into this. Transmissions accuracy is in the range of 98 to 99%. That is remitting to Government of Uganda, because Government of Uganda is waiting on these funds to actually disperse to the entities that require to spend. So 98 to 99% is a good performance. We request that we do keep this up. Compliance to the remittance rule, the T+2, we have a 97% compliance. This is on an average for a month, and errors up to 3%. Again, there is room for improvement. We have had a lot of innovation as far as USSD codes are concerned, mobile money and Airtel. This is to make a service available to our clients across board, even those who may be informal, still growing and requiring a little bit of support. And so we would request that you assist in this regard in also pushing these channels out. We see that the uptake on them is a little bit low. The numbers are not coming out yet. We believe that we need to do more engagement with our clients to enhance this position, and we have shared some statistics there. We have done a number of integrations with MDAs that have systems, and again, here we are growing. We have Ministry of Health, we have integrations with UWEC at the minute. Hospital collections are growing, and it's taken quite a bit of time. Places like Mulago, we're actually not collecting completely. There are some units where we are not yet operating. We believe that these numbers will get better, but efficiency here is very key, because somebody's in need, they're sick, they need to get services as quickly as possible. And we appreciate our partners who have come in to support us in that regard. Finally, I would like to speak about opportunities that are available to work with us and to still strengthen our partnership. Integrations with MDAs, the Ministry of Finance, and generally Uganda is moving into including the digital solutions across government. And every time any of these comes, it means that we need a partner to actually engage with in order to make this service available for those MDAs. We call upon you to take these up whenever they come through. Please do continue to innovate as far as the channels are concerned, making them available and accessible at all times. Tax education and tax literacy is a key, because as Mr. Ochichi said, somebody will take a loan, but maybe not for the purpose that they have actually told the bank. So this taxpayer needs to be actually engaged at inception, so that the risk that this money may not come through, even the risk that they will not grow and eventually get into the bracket of being tax compliant, is mitigated. So that aspect needs to really be emphasized at the bank level, because the credit is being taken at that point in time. So it gives a very great opportunity for you to engage, even on the matters of tax literacy, especially. We request that you are our face in this term. And I think Mr. Fabian talked about 3 million customers. I think that is what I saw. I can imagine our tax register is just at 4.2, I think, by now. So your clients are kind of nearly getting to the level that we are at. So I don't know if we cut across all of us, maybe we'll have 10 million. Of course, there are exceptions. We may have total accounts, we may have all this. There are certain things that we may have to discount. But clearly, there is a little bit of disjoint in our operations. And I think that if we synergize, if we integrate, if we share more information, as Agnes was saying, I think that we can work towards making this tax compliance a lot better for our nation. So without much ado, ladies and gentlemen, we'll be going into the awards for the bank. As you can see, all of us have done very well. To select a winner is a difficult matter, but we have endeavored to do this very fairly based on data, and so we request that there will be no protests against the results that may come out today. But the final position really is that we appreciate the partnership, and we are in this for the long haul. We are in this as a marriage, and we do not envisage an end very soon or ever. So let us make it better. Let us make it stronger. Let us make it more enjoyable as we collaborate. I think as they say, if you want to go fast, you go alone. But if you want to go far, then you need to carry quite a number. We want to go far. So we will be ready to wait. We'll be ready to encourage, as you encourage us as well, because I think our job also requires quite a lot of encouragement. We pray that we can continue to work this partnership through and make it really successful at the end of the day. I would like to appreciate the Commissioner General for allowing us to have this interaction today, as well as my immediate boss, Mr. Karisa, for allowing us to engage our clients. And we pray that this will go a long way in making our journey as an authority to improve compliance a lot better. I thank you, ladies and gentlemen.
Thank you, Madam Diana. If you don't mind, I'd like to indulge you to just stay on the stage for the next activity. As she's already informed you, it's time for the awards. Can you first clap for yourselves in anticipation? We had 25 participants or 25 banks that were considered, and like she said, nothing personal, it's all data, the numbers don't lie. Now, to support us in giving out these awards, allow me to invite also our manager, Revenue Collection, Madam Kellen, I see her making her way, and also allow me to indulge the CG to just join us to support us in giving out these awards, after which he will go on to give the closing remarks. So, Mr. CG, you're very welcome as well. Obrigado. So, these awards, there are three main categories. And all of these are going to be run by the videos, and I'm sure the team behind is ready. So, of course, we'll be looking at the most compliant bank, most innovative bank, and the best in client service. For each, we shall award the first runner-up and the winner. May the best banks win. Of course, everyone else will receive a certificate of participation, I think is the word. I'm hesitating to use it, attendance, participation, but yes, it's only in kindergarten where everyone is a winner. But here in adulting, we shall have only 3 winners. So, so I'll ask the media team to roll out. We'll start with the most compliant bank.
Issues on time within 48 hours, compliance with T+2 foreign collections to BOU, submitting to URA the remittance advice for transfers to BOU as per the collection agreement, threshold of 98% compliance for credits and notification of payments, and honoring third-party agency notices. The
All right, I think we'll just rewind and come back again. Just give another opportunity for us to try that again. Media team, if I'm happy to read, if you can put the citation there. If we are unable to. I request Lambert, if you can just get me that citation, just if technology fails us.
And resolves issues on time within 48 hours. Compliance with T+2 for remittance of collections to BOU. Submitting to URA the remittance advice for transfers to BOU as per the collection agreement. Threshold of 98% compliance for credits and notification of payments, and honoring third-party agency notices. The winners consistently demonstrated exemplary compliance, minimizing errors and accurately remitting daily collections to BOU in line with the collection agreement, while maintaining a performance level above the 99% standard. Their proactive approach ensures timely resolution of reported issues and responsive action to required system upgrades, reflecting the dedication to excellence and adherence to the collection agreement provisions. Ladies and gentlemen, join us in congratulating the winners, with the first runner-up having a commendable score of 88%, Standard Chartered Bank.
A round of applause for Standard Chartered Bank. Well done, well done, well done. And if we have a Standard Chartered Bank representative, please make your way to the front quickly. Standard Chartered. Mr. Chichi talked about jealousy, but I know that's not in this room, so let us clap. Yeah, wonderful. Well done. This is the first runner-up, most compliant bank, with an outstanding 88% score. Thank you very much. We'll now go on to find out who the winner is.
And the overall winner, with an impressive score of 92%, Diamond Trust Bank.
Obrigado, 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 obrigado. Diamond Trust Bank, well done, well done, well done. If we have representatives, please make haste. Let's make our way to the front. With a diamond performance, 92% in as far as compliance is concerned. We congratulate you. Well done, well done. Well done, Diamond Trust Bank. Thank you very much. All right, Mr. DJ, we now proceed to category number 2. This is the most innovative bank.
Most innovative bank. This category was evaluated on the following parameters: robust systems, innovative systems, range of payment modes. The winners employed robust systems to eliminate duplicates, detect invalid PRNs and unregistered payments, ensuring timely credits and notifications. Their innovations included automated statements, online access, and timely revenue collection solutions, while prioritizing customer centricity with diverse payment modes like point of sale and USSD code. Ladies and gentlemen, join us in congratulating the winners. With the first runner-up having a commendable score of 83%. ABSA Bank Uganda.
Come on, let's hear it for ABSA. Bugalo, 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 Bugalo. I don't know why they look surprised. Were you not expecting this? Well done on innovation, ABSA Bank. Well done, well done. And now for this category, the winner.
And the overall winner, having an impressive score of 100%. Wow. Guarantee Trust Bank.
Ladies and gentlemen, I don't know if it's in the names of the bank. These guys can assure you, they can guarantee you 100% when it comes to innovation. A round of applause. Oh, Bugalo, 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 Bugalo. Well done, well done, well done. Thank you for guaranteeing 100% when it comes to innovation. Congratulations. All right. Looking at the team, you can even see they have a continuation plan. This is very good. Ladies and gentlemen, best in customer service, client-centric bank.
Best in client service. This category was evaluated on the following parameters: number of branches extending working hours, best collection by amount, best collection by volume. The winners excelled in customer centricity, extending branch hours, and managing high volume tax transactions efficiently. Through diverse payment options, they elevated convenience and the taxpayer's banking experience. Ladies and gentlemen, join us in congratulating the winners. With the first runner-up having a commendable score of 75%, DFCU Bank.
Let's give it up for DFCU Bank. And for this one, allow me invite our representative from PSST, Mr. Moses Ogwapus, just to join us up here in awarding DFCU Bank for being the first runner-up as far as being customer-centric is concerned. Mr. Chichi said there is no jealousy in this room. Ladies and gentlemen, Bugalo, 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 Bugalo. You may be saying but. All right. And for the final winner.
And the overall winner, having an impressive score of 83%, Stanbic Bank Uganda.
Let's give it up for Stanbic Bank. Congratulations, Stanbic Bank representatives. Obrigado, 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 obrigado. Well done, well done, well done. Thank you for thinking about the customer, putting the customer first. One last time, a round of applause to all of our winners tonight. The rest of us may have just come shy in percentage or something like that, but all the best next time. For now, let's put our hands together for the CG as he gets ready to give us his closing remarks. Otherwise, the rest of us will have certification for all the other participants. Thank you.
The representative for the permanent secretary to the Treasury, Ministry of Finance, Mr. Moses Ogwapus, the representatives from the Office of the Accountant General and other officials of government, distinguished leaders of the banking and financial services sector, members of the Uganda Bankers Association, the representatives from the Private Sector Foundation, our distinguished panelists, and those that presented and gave very important addresses this morning, colleagues from Uganda Revenue Authority, our invited guests, ladies and gentlemen, good morning. It's with profound gratitude that I stand before you this morning as we mark our 7th URA Annual Bank Conference. I thank you all for honoring our invitation and for spending your precious 5 hours of this morning today with us as we celebrate together our partnership, but also as we chart a way forward on how we can embrace technology in improving financial inclusion and as well as tax compliance. Allow me, before I go any further, to appreciate the banking and financial services sector, number one, for your great contribution towards the effort of revenue mobilization for the development of our country. As taxpayers, you make a significant contribution, and Dr. Kasi demonstrated that in his presentation. 250 billion coming from one institution. We appreciate that. But also we appreciate the collaborative service that you offer us in collecting revenue from the rest of the taxpayers. And this is what the awards ceremony was about. We thank you so much. This is just a sign. Even those that have not received awards know that appreciates the role that you play. And it is our hope and prayer that the next year conference, you will take that award, because it is being given on melt, and we know that everybody performed very, very well. Let me ask the URA team to clap for you. In the same spirit, I would like to appreciate our Ministry of Finance, Planning and Economic Development for the unwavering guidance and support. towards this effort of revenue mobilization. I recognize and appreciate all the other partners, private sector partners, other government bodies that support us in this endeavor. And let me, in the same spirit, appreciate our distinguished presenters this morning. You have really done a great job. Thank you, Dr. Kasi. Thank you, the panelists, Mr. Chichi, my brother Hussein, and Doctor from UDB. Thank you so much for the splendid job that you did, as well as the URA team. Now, allow me, ladies and gentlemen, to again appreciate the financial services sector for their revenue contribution. I'm reading from this report that in the last financial year, in the last financial year, 2022-23, the collections from this sector came to about 1,085 billion. Please clap for yourselves for this. But also that there has been a steady increase over the last 3 years in the range of about 28% in the growth from this sector. We thank you very much. Now, concerning today's theme, where we are looking at financial technology trends and financial inclusion for enhanced tax compliance and transformation of Uganda's economy, it's very critical that we, both government and private sector, acknowledge the role of technology in helping us shape and also speed up our desire to have as many players as possible in the uptake of financial services, but also in contributing their fair share towards the development of our country. In Uganda, the tax system is predominantly based on self-assessment, as we all know. And this presents significant challenges due to the information asymmetry between taxpayers and the tax authority. Indeed, the emergence of innovations like blockchain technology, like artificial intelligence, marks a dawn in the transformation era that will help in the streamlining and making more transparent financial dealings. The advancement in financial technology, including digital payments, data analytics, artificial intelligence, are revolutionary and will set a new momentum in our approach towards tax administration and tax compliance. These tools not only facilitate traceable transactions and efficient data management, but also secure record keeping and automated tax calculations, simplifying the compliance process for our taxpayers. Globally, other initiatives like the common reporting standards and the automatic exchange of information that has been presented here by the URA team are shaping the landscape of tax administration and enhancing transparency and cooperation to combat tax evasion. Uganda has made significant progress in this regard, committing to implement the automatic exchange of information by the year 2025. In alignment with these global standards, a new law was enacted And this law requires financial institutions to collect and report financial account information for foreign customers to the Uganda Revenue Authority, reinforcing the government's commitment to transparency and compliance. And as usual, we will appreciate the support of the financial services sector in this cooperation in sharing this important information. URA is proactively investing in cutting-edge technology and technology-driven solutions to streamline tax compliance. I can mention but a few. Some of these innovations include the famous IFRIS, which some people have chosen to call syphilis. But there is always a benefit. In some of these contradictions, they give us a chance to speak more about some of these initiatives and to understand them better. I'm sure at the end of this storm, everybody will be knowing what IFRIS is. But let me take this opportunity to thank the financial services sector for having been one of the pioneers that embraced and started utilization of IFRIS. Please clap for them. Otherwise, we would have had similar demonstrations and closed down by the banks. But you embraced this seamlessly, and we appreciate you for that. Now, Uganda Revenue Authority Uganda Revenue Authority, I'm trying to skip through the long speech so that I speak to the key issues. In 2023, we unveiled our digital strategy, and we mentioned a number of things that we will do. I would like you to confirm that you've seen improvement in some of these areas. One of these was to relaunch our URA web portal. I hope you find the current portal very user-friendly, but also flexible in that you can read it in any language of your choice. If you've not tried that functionality, please do. Even the Chinese can read everything about our tax processes and systems in their language, foreign and local languages. Those who want to read it in Luganda, all the language options are there. We have also been working on revamping our client ledgers. This took longer than expected, especially at the close of the calendar year 2023. There was a lot of challenges with the ledgers, but that was to improve them, and I would like to get your feedback on your current experience. Of course, we have broadened the channels of payment, including use of the USSD code, which again, we have to deal with some of the providers like telcos to collect some of our monies. We have, of course, IFRIS, which we are rolling out, and we have been doing IFRIS in a phased approach. So we came to the big guys, like the bankers, about 2 years ago. Then we moved on to the other next level of wholesalers. It is now that we are trying to push it further down to the retailers and wholesalers, especially in the central business area, that we started hearing of complaints about this IFRIS, but we've been doing it in a systematic way to allow adoption. So as we roll out these and many other technology initiatives, it does not come without any challenges. Some of the challenges we accept could be system glitches, and this one we have a committed team to respond and improve and sort out any system challenges. But I think the bigger challenges is adoption to new ways of doing things, adoption to technology. And on this front, we would like to call upon all our partners in developing Uganda, especially those that have adopted some of these, the early adopters of these initiatives, to come out and support us and support others who still have reservations and fear that these systems are for our good, because if technologies like IFRIS take off fully, we will be lowering even the cost of doing business. A lot of the work to do the complicated calculations of what tax is payable, of entering transactions after a period when you can't remember all of them, will be done by this technology, and it will make lives easy for both the taxpayers and us, the tax administrators. But very importantly, it will level the playing field, making sure that people are assessed fairly. So the story of unfair assessments will end once we give the opportunity to this new innovation to take off. Ladies and gentlemen, I therefore want to call upon each one of you to embrace the transformative potential of technology and work hard on it in sorting out any challenges that we may meet initially to ensure that the desired financial inclusion, the desired tax compliance, and efficiency in offering services to our clients happens, and that will be the bigger benefit for these innovations. I want to comment very briefly as I conclude on some of the comments that came through the presentations and the panel discussions. One of these was the issue on tax proposals. And I agree very much with Mr. Kasi that there is need for engagement and further discussion, because the proposal that I know of that was touching banking agents was a charge on withdrawal, not on all transactions. I don't know if it has changed to broaden to every transaction. And I thought such a measure would be enhancing the idea of people using banks to make all the transfers. What benefit is it to withdraw 100 million from the bank and go and pay it in cash? So if it is a bank transfer, there should be no charge. But if it is a withdrawal, that is when the charge kicks into effect. But not just for banking agents, but all the players in that sector, including the other fintech service providers and, of course, the banks themselves. But it is important that we engage, we discuss these proposals further, we hear more views from the sector players, because definitely you have more information and experience to this. What I want to emphasize, it is a common interest for the Banking Association and even for government to keep financial dealings in the banks and online where things are traceable, because that's a common benefit for everybody involved in this process. Definitely, the issue of trust is very, very important. We want to thank our partners for the great collaboration we have, even in revenue collection, which is based on trust, and would like to promote this further. And I think one of the key ingredients of building this trust is forums like this one, where we engage and discuss the challenges and find the best way forward. And I think all the presenters emphasize this trust. Mr. Ochichi gave very good examples on what we need to enhance trust. And that is the integrity of our people, but even the integrity of our processes. It is very, very important that whatever we do is built on the firm foundation of integrity. But number two, competencies. We are committed as Uganda Revenue Authority to build firmly on these, and also to prepare and manage and mitigate any challenges that will come through. Mr. Hussein elaborated on some of the risks that come with adoption of technology. Definitely cybersecurity is one of those, and at Uganda Revenue Authority, in preparation for taking our services to online and digitizing and automating most of our processes, in the year 2021, we created a department of IT. So we have IT and innovations at that level, headed by a commissioner who is away today. You would have been here, Commissioner Robert Mutebi, in charge of IT and innovations. But we have gone further to create a division of cybersecurity. So we are raising up the level of management of these very important innovations that we are bringing on board. It is our responsibility that once we collect data from you, we manage it in a secure manner that will not compromise your businesses and will definitely give you a peace of mind that your data is safe with us. So we are doing everything on our side to mitigate and manage the challenges that come along with these technology adoptions. Therefore, ladies and gentlemen, I would like to conclude by thanking everybody who has participated in this conference. I thank the organizers, the team of finance from Uganda Revenue Authority. Thank you for doing this and doing it well every time you prepare to host our partners. I thank our partners who have set apart their whole morning to spend time with us. This is time well spent. We are available for further engagement and discussions. Let us take on any challenges that you may be having, even on a one-on-one, as we conclude this formal program. I also want to thank our panelists and those that presented papers for doing it so well and sharing with us a wealth of information. I want to thank the Uganda Bankers Association for being good partners and always bringing out the pain points of your members and giving us an opportunity to respond to all of these. I encourage you to keep up this spirit of collaboration and discussion. And work more closely in building our nation, Uganda, because as we are all aware, seasons have changed. We are in this season of our country where we must think about self-sufficiency. The opportunity to live on borrowed monies to support our budget has been dwindling for very obvious reasons, and it's time for every nation to be self-sufficient. So when you look at where we stand in terms of revenue mobilization, there's still a lot of room for improvement. Tax to GDP of about 14% is not enough to bring development to our lovely country, Uganda. And yet, the gap that exists between the revenue administrators and the revenue, the taxpayers, seems to broaden in the absence of technology. Imagine where you rely on voluntary compliance and voluntary tax assessment, and the degree of compliance is as low as 10%. Someone declares only 10% of their financial transactions. How can we get out of that ditch unless by embracing technology that brings transparency? Wherever we've tried to use technology as maybe complicated to understand initially as it appears, like IFRIS, we have found improvement in tax declaration tenfold. So that shows you that there is so much room for improvement, and it is time for us to join hands in embracing technology to solve some of these challenges. Other nations have done it, and I think we can do it. I thank you very much for your support. I thank you so much for your precious time. I congratulate the winners, and I encourage those who have not won to just put in a little more effort. Maybe next time it will be your opportunity. I thank the representative of the Permanent Secretary. Thank you, Comrade Ogwapus, for spending your precious hours with us. Thank you, distinguished leaders of the banking and financial sector, all respective MDs. I see your faces, I see your time, and I appreciate it, and I thank the URA team for putting this conference together and for carrying us through all the previous activities. It is my singular honor and pleasure to declare this conference closed, but also hand back to the MC maybe to tell us on the next point of the program. Thank you very much.
Thank you, CG. I was about to go home, but allow me just indulge you, CG, to just return one more time for a photo op moment. If we can have the CG together with the different panelists and speakers who we have had. So CG, I'd like to invite you to just come back one more time. So business is not really closed, as you can see. I'd like to invite our panelists who were here earlier. Please join us. Our commissioners present, please come. We'll have two sets. We'll have this picture, and then I'd like to have a picture with the winners for tonight as well. I think it would be prudent that we have a picture with them as well. I'll ask the winners from tonight to also get ready to join the CG up there after this. After the panelists have taken their seats, we'll invite the different winners. The winners compliance, the winners customer centric, and the winners innovation. Please join the CG up there for a group picture as well. The different banks that won, quickly, thank you.
You don't need to remind winners, they know themselves.
They don't need a reminder, those ones.
No.
Wonderful. These were the winners. Thank you very much. Last but not least, CG, I'm happy to inform you that you are also a winner in your own category. And I'd like to invite the manager, revenue collections, just to hand over a small token of appreciation.
There is no citation for that.
Yeah, there is no citation, really. Toviri Demwao. And yeah, if you want the citation, you will see the MCs later. Congratulations, congratulations. Finally, would like the organizing committee that has put this together to just have their picture as well. Our chairwoman,
organizing committee, very quickly.
Charlotte and crew.
Have your moment with the CG.
This is the last picture.
We have some evaluation forms on the tables as well. I hope you have filled
yes.
You can use this moment for that. Our organizing team.
Organizing committee are rushing.
Hey.
Does this reflect on appraisals? It might reflect on their appraisals. They may say, didn't you see me in the photo?
Diana will communicate that.
Madam Diana, please advise if this affects the score on the appraisals. The closer you are to the CG, the higher your pass. the smartest finance team. Oh, Bugalo, Bugalo, Bugalo. Thank you very much.
Thank you very much. Thank you.
We'll allow the CG to take his leave. But for the rest of you, we have a gift and a certificate. And I'm going to invite Lambert to just come and, yes, to just guide us as we hand over the certificates and tokens of appreciations for all the other banks present. So please, as soon as your name is read out or your bank, please, let's make haste and come up.
Okay, let me just read out as they are, in no particular order. I will start with MTN Mobile Money Uganda Limited. MTN, if you're here, please. As MTN comes, let him request Centenary Bank to join us.
MTN representative, let's make haste.
Okay, Centenary Bank is coming. Who is MTN? No, okay, the members are there, it's okay. Centenary. EcoBank Uganda, if you are here with us. Anyone from EcoBank? Yes, EcoBank is with us. As EcoBank is coming, let me request Finance Trust Bank to also make your way up here. EcoBank is here with us, okay? Finance Trust Bank. Finance Trust Bank, you kindly get on queue. NCBA Bank, I would request that you also make your way up here. Finance Trust. Anyone from NCBA? Oh, yes. Thank you. NCBA is coming. Yeah, late. I&M Bank. I&M, yes, I know you are here. Mr. Antulime was here before. Anyone still here from I&M, please come up. As I&M comes, let me request Bank of India. Bank of India. Bank of India, as Bank of India comes. Anyone from I&M? I&M, I think they have gone out. Bank of India. Bank of India. Exim Bank Uganda. Exim Bank Uganda, if you are here with us, please. Exim Bank, yes. Airtel Mobile Commerce Uganda Limited. Airtel Money. Exim, okay. Airtel Money, yes, we are here, thank you. As Airtel comes in, let me also request Housing Finance Bank to make your way up. Housing Finance Bank. Housing Finance, they are making their way up here. I have seen Bank of Africa. I know you are here with us. Please come and join us on stage. This is Housing Finance. Bank of Africa is coming. As Bank of Africa comes, let me request United Bank for Africa, Uganda. United Bank of Africa is also in the house. Thank you for coming and gracing the occasion.
That's your BA.
Oh, Faith, how are you? Nice to see you.
No, this
Bank
is
of
your
Africa.
BA.
Then UBA. Well done. Nice to catch up again. Thank you very much. Nice to see you. Post Bank Uganda. Post Bank, yeah, Post Bank is with us. As Post Bank makes its way up, let me request Cairo Bank as well to join us. Let me request Cairo Bank to join us as well. Yes, that is Post Bank. Thank you. Cairo, are you here? Cairo is here? Cairo, okay. Just hold on. As Cairo makes its way, KCB Bank Uganda, please kindly come up. KCB Bank. As KCB comes, anyone from Citibank? Citibank, yes, I saw. KCB is here. Okay. Thank you very much for gracing the occasion. Okay, Citibank is coming up next. As Citibank waits for its turn, let me request Equity Bank Uganda. Equity Bank. Citibank. Equity Bank, if you're with us. Citibank? Equity can wait. Okay, as Equity makes its way, let me request Tropical Bank Uganda to kindly come up. Anyone from Tropical? As we wait for Tropical, we have Opportunity Bank. This is Tropical. Tropical's coming. Yeah, this should be Tropical. Opportunity Bank Uganda. Opportunity there. Tropical is here. You can kindly. Thank you. As Opportunity makes its way to the podium, let me request Pride Microfinance. Pride Microfinance to join us to the podium as well. Okay, Pride is here. As Pride comes up, lastly, let me request the Bank of Baroda to please kindly come up. And Bank of Baroda, I know you are here with us. Please come and receive this one. Okay, and let me request our regulators, Bank of Uganda. Bank of Uganda, if you are still with us, please kindly come up and receive this token of appreciation. Anyone from Bank of Uganda? Okay. That's all? That's all. Okay. Thank you very much. That was it from the appreciating team, and I want to thank you for being around until this time. So, Ronnie. Hey, we have a picture as well, eh? We had been eliminated.
Wonderful.
Thank you.
So, ladies and gentlemen, we have officially come to the close. The CG had officially closed. On the way out, we have a tax advisory table in case you'd like to consult on anything. But you're welcome to leave at will. And the DJ will be taking it over from here. Ronnie Avasa is my name. Assistant Commissioner Programs, working with...
You have done well, Assistant Commissioner. You will be promoted to Commissioner. And my name has been Lambert, or is Lambert Rusoke, and I want to thank you for listening, and God bless you. Thank you.